Good morning, students. Welcome you all on the fifth lecture of Ind AS 115. So, students, there is a good news for all of you. Instead of having 5 lectures on Ind AS 115, considering this is a very detailed and very lengthy standard, so we have also given additional 1 class to Ind AS 115. And instead of 5 classes, this standard will be covered in 6 classes. Okay. Because this is one of the most important standard from the examination perspective, from the learning perspective, and from the real life interview perspective as well. Okay. So I can see a lot of students on the Zoom link. So good morning, everyone. I can see Abrakesh, Ankita, Dhanya, Mamta, Niranjan, Nisha, Pooja, Savita, Stephen, Usha, and I can see few students have joined offline. Khushi, Rajat, Rahul. So very good morning, everyone. And let's start the journey of Ind AS 115. Rather to start for the day, but let's continue the journey which we have started 4 classes back, right? Student, in the last class, we have discussed the third step, step number 3, determination of transaction price. So out of this 5-step model, the first step was identify the contract with the customer. The second step was determine the performance obligation. The third step was determine the transaction price, right? The second and third is the largest step, right? It is the biggest step out of the 5 steps. The step number 4 and step number 5 is pretty smaller than step number 2 and step number 3. Students, in step number 3, we have discussed that how to determine the transaction price, and we have discussed the transaction price is a price which a customer or which an entity is expected to receive from the customer, or customer is obligated to pay to the entity, right? So this standard is largely from the entity perspective. When entity is transferring a goods and services to a customer, customer needs to pay a consideration, and that consideration is a transaction price. The transaction price could be a fixed consideration as well as a variable consideration. Okay. Transaction price could be a fixed consideration as well as variable consideration. We have discussed that while computing the transaction price, we have discussed the 4 key aspects of transaction price. Number 1, variable consideration. If there is a variable consideration, how this variable consideration is accounted. So variable consideration is something which is depending upon the future outcome, right? We have discussed the example of bonus, incentive, penalties, volume discount, right? Students, in those cases, variable consideration is required to be estimated, right? And for estimation, there are 2 statistical methods. One is probability weighted approach, which is expected value approach. Number 2 is, what is number 2? Number 2 is most likely approach. Probability weighted approach is required to be used when there are multiple outcomes of an event. Most likely approach is required to be used when there is a what? Binary outcome, right? When there is only 2 outcomes, binary outcomes, either yes or no. Okay, either you will pass or you will fail. So there are only 2 outcomes. Okay, so we discussed many illustration questions on variable consideration. Then students, we have discussed the concept of significant financing component. What is the concept of significant financing component? The concept of significant financing component says that you have to do the substance based accounting. What is meant by substance based accounting? Means if there is a difference between the goods and services delivered by the entity and the amount collected by the entity, if there's a difference between the timing of goods and services delivered, performance obligation satisfied, versus the amount received, okay, if there is a difference between the time period, in that case you need to see why there is a difference between the time period? Why there is a difference? I mean to say, if the entity has delivered the performance obligation, okay, why entity has not collected the money? Students, the answer could be, sir, there is a credit period, right? There is a credit period. Credit period होता है ना बहुत सारे business में. I was working in telecom industry. So in telecom industry, there is a credit period of 1 month or 2 months. Even though if you are using your mobile phone postpaid connection, in prepaid you are paying in advance, but in postpaid what you are doing, you are using the phone for entire month, then you will get a bill, invoice, and then there is a due date of that invoice after 15 days, correct? So there is a difference between the performance obligation delivered by the entity and Airtel, who is collecting the bills, collecting the money. Are you using credit card? Are you using credit card? Anyone who is using credit card? Yes. Okay, Rahul is saying yes, sir. So if you're using credit card, you're using the credit card for entire month. There is a billing cycle. Okay. For example, billing cycle is 15 to 15. So you got the bill on 15th of September, but there is a due date to that. So the invoice, the bill will generate on 15th, but you have to pay within 15 days from the date of generating the bill or invoice. It means you have used the credit card while purchasing some goods and services. You have used the credit card, you booked a hotel, flight ticket, right? You have already used. So the entity has already performed the performance obligation, but you are paying after 30, 40, 50 days. There is a difference between performance obligation delivered versus amount collected. Whether we can say that there is a significant financing component exist. Can we say that there is a significant financing component exist? Yes or no? Yes or no? In these two examples of credit card, of telephone, Ayush is saying no. Why, Ayush? Why no? It is significant financing component, significant. So significant financing component exists when the time value of the money is material. When the time value of the money is material. You are right, Ayush. When there is a more than 1 year period, when the difference is more than 1. So the revenue recognition and revenue measurement become very much complex. कोई 5 दिन का credit period है, कोई 7 days का credit period है, कहीं पे 1 month का credit period है, right? So everywhere this financing interest income recognition will get started. That is why standard told, if the difference between the time period of performance obligation and the consideration is up to 1 year, you are not required to compute the significant financing component. But if the difference is more than 1 year, then only you are required to compute the significant financing component, right? The entity has delivered the performance obligation but has not collected the money, for more than 1 year. It means the entity has funded. Okay, entity has funded. Nisha is saying, sir, in credit card there is an interest payable. Nisha, that interest payable is after due date, not within due date. I am paying my credit card bills. For example, I am using HDFC Regalia credit card, right? So the cycle is 16th of every month. For example, whatever purchases I have made from my credit card. So in the last month, I went to Singapore and I booked flight tickets from my credit card. Okay. So I used my credit card. The bill got generated on 16th of September. Now I have a due date. I have to pay by 5th of October, which is today. So I'll pay it today, right? And I have used the window of 45 days without any interest. But if I'll not pay today, then I will be, then I'm obligated to pay interest from tomorrow. Okay, right? So, but why we are not computing the significant financing component in this case? Because the time period is less than 1 year. Okay. So standard says that if time period is less than 1 year, in that case, you are not supposed to compute significant financing component. Okay. Is that clear? Is that clear? Sir, whether it will be applicable only when the customer is paying after 1 year? No. If the customer has paid in advance for more than 1 year, so the customer has already paid the money, but the customer will get the goods and services after 1 year. It means the customer has funded your business. In the first case, you have funded to the customer. Okay. You remember we have done one small example. Do you remember this example? I hope my Excel file is visible. I hope my Excel file is visible, guys. Yes. You remember we have done 3 kind of example where the consideration was 10,000 and the customer is paying upfront. You remember that? Then customer is paying after 1 year. Then customer is paying in advance by 1 year. Correct? So when the entity is funding to the customer, the entity is generating an interest income. When the customer is funding to the entity by paying in advance, the entity is recognizing an interest expense, right? There are few cases where even though the time period is more than 1 year, but still it will not be considered as a significant financing component. Why? You come to me. So who is the student? Nisha came to me and she told, sir, I have heard that you are going to start FR batch in the next month, in the month of November in the next year. So November 2025, I have announced the opening of FR batch, November 2025. So just to secure the seat, Nisha has paid me 5,000 rupees because she told that, sir, at that point of time, right now my articleship is going on. And at that point of time, I have to attend the FR classes. And sir, please accept my deposit. The registration is on first come, first serve basis. So in this case, whether Nisha is funding my operation, I mean to say whether I'm needing money from Nisha, have I told her that please pay me 5,000 rupees, I am in urgent need of money? Answer is no. She has paid just to secure the seat. Just to secure the seat. Right? Okay. So in this case, significant financing component does not exist. So you need to understand, my dear friends, whenever you are solving a problem in the examination, a question in the examination, right? Please read the question carefully. Okay. The examiner will put all the efforts, to digress you. Okay. So don't get distracted by just reading the line that the difference between the time period, the difference between the performance obligation delivered and money collected is more than 1 year. Don't get distracted by this line. See the reason for that line, right? In the next line, it was written that the customer has paid the money in advance to secure the order, to secure the delivery of the goods and services, right? Or in the next line, it was written that, for example, Abrakesh came to me and he told that, sir, I want to attend the FR classes. Okay. So he has paid me the money, 5,000 rupees. In a year, I announced 4 batches in a year. Generally, my policy is if someone who has paid me the money, my validity period is 1 year. So he can attend any batch in the upcoming 1 year, for example. So the next batch is going to start after 15 days. So Abrakesh has paid me the money and I told Abrakesh, you can join this batch also. It is going to start after 15 days. He did not join, right? So I was ready to deliver the goods and services to Abrakesh, but he has not accepted. In the next batch, May batch, he has not come. So in the third batch, he has again not attended. So the delay is not because of the company. The delay is not because of Alok. The delay is because of Abrakesh. The customer is not willing to accept the goods and services at that point of time. Right? Is that clear? Is that clear? Number three, the entity is announcing that, and typically in case of flight business, when you book the flight at an early basis, for example, you want to travel to Nepal after 3 months. If you book the ticket today, you will get a better price. If you will book the ticket after 1 month, comparatively, the price will be costlier than today. Right? So to avail the better price, to avail the good discount, the customer has deposited or the customer has paid money in advance to get the early bird discount. In that case, whether it will be a significant financing component, answer is no. Whatever customer has paid, that will be the revenue to the company. I hope it is clear to each and every one of you. Fourth, variable consideration. For example, sales-based royalty. I am the author of an Ind AS book. I have delivered my performance obligation and I have written the book and I have given the content to the publisher. I have given the content to the publisher, right? Publisher will pay me a royalty. But the royalty is on the basis of sales-based royalty. I have delivered my performance obligation today itself by providing the content to the publisher. But whenever publisher will be able to sell the goods in the market, the books in the market, he will pay me the royalty. So I have delivered the performance obligation today, but I will get the royalty after 1 year, 1.5 years. Whether I will say that significant financing component exists in this case? Answer is no. Why? Because this is not a fixed consideration. This is a variable consideration which is depending on the future events. Okay. Friends, I'm sure that you guys must be getting benefited by early morning revisions of the last classes. And I can tell you, in every classes, like this is the 5th class of Ind AS 115. If you pick up initial half an hour, it will be a great revision to all of you. So these videos are with respect to, these videos are on YouTube also. You can just refer these videos and I would recommend you, once you have attended the classes, please pick up the first half an hour from every class, first half an hour, right? Okay. Sure, Nisha. Let me know the illustration number and I will again discuss that illustration. So friends, we talked about significant financing component also. Okay. Then friends, while determining the transaction price, we talked about non-cash consideration. What is meant by non-cash consideration? Non-cash consideration. What is meant by non-cash consideration? Means consideration other than in cash, kind of a barter. Okay. So in that case, the entity which is delivered the goods and services, the entity has to recognize the revenue, but at what value? But at what value? The value is, tell me, when you are selling goods on cash basis, what is the amount at which you are recognizing the revenue? The money received, transaction price. Yes. In case of barter, Anila, not goods given. Now tell me, Anila, one thing. I am a teacher. You came to me and you told, sir, I want to attend FR batch. I said, okay, my fees is 5,000 rupees. Another person came to me, student came to me and he told that, sir, I don't have enough money. I can pay you only 2,000. I was ready to provide him the FR classes at 2,000 rupees. Another one came to me and he told that, sir, I have only 4,000 rupees and I can pay you 4,000 rupees. Please allow me to attend the FR batch. I said, okay. Anila, tell me, what is my revenue? Goods given or money collected? The value of the goods is 5,000 rupees, Anila. For you, it is 5,000. So I have to recognize the revenue for 5,000 rupees. from the goods delivered to you, from the another student 2000, from the third student 4000. So goods are the same. I am standing in the podium and I'm teaching to all the students simultaneously some other goods and services or some other assets. In this case, what should be my revenue? So मेरा रेवेन्यू क्या है? जो मुझे मिल रहा है. पहले मुझे कैश मिल रहा था, अब मुझे क्या मिल रहा है? अब मुझे क्या मिल रहा है? अब मुझे एसेट्स मिल रहा है, गुड्स एंड सर्विसेज मिल रहा है. इट मींस my revenue is the value of the goods and services received. My revenue is the value of the goods and services received. I hope this is clear to everyone. Yes, sir. But if the revenue, but if the fair value of the goods and services received is not determinable, then what? तो सेकंड ऑप्शन क्या है? अगर फेयर वैल्यू ऑफ गुड्स एंड सर्विसेज नहीं पता, तो मुझे ये तो पता है कि मैं बाकी कस्टमर्स को किस वैल्यू पे बेचता हूं. इन दैट केस आई हैव टू रिकॉग्नाइज रेवेन्यू एट द फेयर वैल्यू ऑफ द गुड्स एंड सर्विसेज डिलीवर्ड. एट द फेयर वैल्यू ऑफ गुड्स एंड सर्विसेज डिलीवर्ड. आई होप इट इज क्लियर. I hope it is clear to all of you. Yes. So first priority is fair value of goods and services received. The second priority is fair value of goods and services delivered. Okay. Perfect. Now, friends, the fourth part. So we talked about variable consideration, significant financing component, non-cash consideration. The fourth aspect was consideration payable to a customer. Consideration payable to a customer. Okay. Consideration payable to a customer. The fourth aspect is consideration payable to a customer. Now, I am paying something to the customer. Why I will pay something to the customer, right? So, for example, when the customer buys goods and services from the entity, generally the entities give some cashback. Have you used Paytm Cred? Have you got any cashback? When you use Paytm, you are getting some cashback. Yes. So what is that? What is that cashback? First, you are paying the money, then you are getting a cashback. People got a lot of cashback while using Paytm, right? Lot of cashback. So what are those cashbacks? These are nothing. This is consideration payable to a customer. Now tell me, when Paytm is giving you cashback, whether Paytm is getting any goods and services from you. Is there any goods and services for which you are transferring a control to the Paytm? आपने अपने मोबाइल का बिल पे किया 500 रुपीज पेटीएम से, यू गॉट अ कैशबैक ऑफ 2 रुपीज. आपने क्या पेटीएम को कुछ बेचा है? हैव यू ट्रांसफर्ड एनी गुड्स एंड सर्विसेज टू पेटीएम? एंड दैट इज व्हाई पेटीएम हैज गिवन यू 2 रुपीज. आंसर इज नो. इट मींस what is the revenue for Paytm? For example, it is, what is the revenue? It is 500 rupees or 500 minus 2 rupees. Net revenue 500 minus 2, it is just like a discount. Okay. So friends, whenever the entity is paying a consideration to the customer, you need to check whether the entity is getting any control of the goods and services. Right? For the distinct goods and services, क्या एंटिटी को कुछ गुड्स एंड सर्विसेज मिल रहे हैं जिसके लिए एंटिटी कस्टमर को पे कर रही है? इफ द आंसर इज नो, इन दैट केस whatever consideration is paid by the entity, it has to be reduced from the revenue. But if the entity is getting any control of the goods and services, right? If the entity is getting any control of the goods and services, right? In that case, the revenue has to be recognized on the gross basis, and whatever the entity has paid to the customer, the entity needs to recognize the cost of that. But in that case, whenever the entity is paying a consideration for the goods and services received from the customer. When the entity is getting a control of some goods and services in lieu of the consideration payable to the customer, in that case, you need to check two aspects. Aspect number one, whether the entity is paying to the customer for the goods and services received. Is it at fair value or less than fair value? मतलब एंटिटी ने कस्टमर से जो गुड्स रिसीव किए उसकी फेयर वैल्यू 100 रुपीज थी और एंटिटी ने भी ए लिमिटेड हैज सोल्ड लैपटॉप टू आयुष फॉर 50,000. द कंपनी हैज आल्सो bought a chair from आयुष at a consideration of 10,000. Determine the transaction price in below circumstances. ये एग्जांपल मैंने लिया था ना. This example I've discussed in the last class. Yes. Okay. So if the consideration payable to the customer is equal to or less than fair value of the goods and services received, then it is okay, no problem. जो actual में pay किया वो cost होगी. But if the entity is paying more than the fair value of the goods and services, आप बताओ, मैंने आपको FR की क्लास बेची. I have sold you FR classes. The fair value is 5,000 rupees. Okay. I have to collect 5,000 rupees from you. But I have purchased a chair from you, or the fair value of the chair was 2,000 rupees, but I have paid 3,000 rupees. I have paid consideration to the customer at fair value, at more than the fair value of the goods and services received. मैंने आपको 5,000 रुपए की क्लास बेची और मैंने आपको 3,000 रुपए दिए. चेयर मैंने आपसे खरीदी और 3,000 रुपए दिए, बट चेयर की फेयर वैल्यू 2,000 रुपए है, तो मैंने आपको 3,000 रुपए क्यों दिए? Why I have given you, why I have paid you 1,000 rupees extra? 1,000 rupees discount on what? On what? On the FR classes. It means my revenue is not 5,000, my revenue is 4,000 rupees, right? My revenue is 4,000 rupees. Okay. And whatever I'm paying, so this cost is not 3,000, this cost is only 2,000 rupees. Okay. So revenue, net revenue is 4,000 rupees. Okay. Is that clear? By selling a FR classes, what I'm getting? I am getting, how much money I'm getting? I received 5,000 rupees. I paid 3,000 rupees. Net money I have received 2,000 rupees. So 2,000 cash I have received, and I have also received fair value of the chair received. Fair value of the chair received. The fair value of the chair is 2,000, 2,000 cash. My revenue is 4,000 rupees, right? Is that clear? Clear or not clear? What is the accounting entry? Chair account debit, cash account debit to revenue account. Friends, is that clear or clear? For Ayush, what will be the entry? So what will be the entry for Ayush? Okay. What Ayush has paid? What Ayush has paid and what he has received? He has received what he has paid. First tell me. He has paid 5,000 of FR class. He has paid 5,000 and received 3,000. So net cash, he has paid 2,000. What he has paid? Paid share of rupees 2,000. Okay. What he has received? Received FR classes. Received FR classes means tuition, means coaching classes, coaching. Chair means fixed asset, credit. Uppercase, I hope it is clear now. 2,000, 2,000, 4,000. Is that clear, Uppercase? So Uppercase was asking, what will be the accounting entry for Ayush? This will be the accounting entry for Ayush. Means वन हु इज अ कस्टमर। कस्टमर की अकाउंटिंग एंट्री है, एंटिटी की नहीं है, ये रेवेन्यू की नहीं, कॉस्ट की अकाउंटिंग एंट्री है जो कस्टमर अपनी बुक्स में रिकॉग्नाइज कर रहा है। क्लियर? इज दैट क्लियर और क्लियर? इज दैट क्लियर और क्लियर? टेल मी फ्रेंड्स। या ओके, ओके, now let's move on to the next part, and before that let me see if I can give you one more question on the consideration payable to the customer. So just allow me a minute. Just allow me a minute. Let me take a question on consideration payable to customer. Yes. Please confirm if the please confirm if this is visible to all of you. Please confirm if this is visible to all of you. Is it visible to all of you, friends? Is it visible to all of you? Okay. Yes. An entity that manufacture consumer goods enters into a 1-year contract to sell goods to a customer that is a large global chain of retail stores, right? So this entity is like Hindustan Unilever or ITC. This entity is selling goods to Big Bazaar, to DMart, to Reliance Retail. Okay. The customer commits to buy at least 15 crore rupees of products during the year. Since these are the big departmental store, okay. So these are just like a DMart. Have you visited any DMart departmental store? Anyone who has visited DMart departmental store? Anyone? Yes. So you must have seen these are the big departmental stores, right? So this departmental store has given a commitment to the entity that I will purchase 15 crore rupees of product from you during the year. The contract also requires the entity to make a non-refundable payment of rupees 1.5 crore to the customer at the inception of the contract. And this entity who is selling goods and services to the DMart, this entity is also paying rupees 1.5 crore to DMart itself, right? Why? The 1.5 crore payment will compensate the customer for the changes it needs to make to its shelving to accommodate the entity's products. You must have seen that the product was stored in a shelf, right? वो बहुत सारी शेल्फ होती है ना, उसमें प्रोडक्ट रखे होते हैं. Okay. So DMart, the entity is paying to the DMart so that the DMart will do the modification, customization in their shelf. अपनी अलमीराज में मॉडिफिकेशन कस्टमाइजेशन कर पाए ताकि इस एंटिटी के प्रोडक्ट वहां पे वो रख पाए, राइट? ओके. The entity does not obtain control of any right to the customer sales. And this entity like Hindustan Unilever, ITC, they are not getting any control on those shelves, right? So those shelves are for the purpose or benefit of DMart, not for the entity, right? So entity का कोई control नहीं है. जो shelf DMart ने बनाया है, if tomorrow DMart will decide to keep some other product like Pepsi, Coca-Cola, okay, some other product, this entity cannot control DMart to not to keep those product in those shelves, right? My question to you is, the entity is selling goods worth 15 crore rupees. right? That is the revenue, that is the transaction price. But this entity is also paying rupees 1.5 crore. This entity is also paying rupees 1.5 crore to the customer. So my question to you is whether the revenue is 15 crore and cost is 1.5 crore, or the revenue is 13.5 crore. What is the answer? What is the answer? Students, this is the illustration number 52. Now I have moved to the Excel file. Tell me what is the answer, how to solve this answer. If such question will come in exam and the weightage of this question will be at least 4 to 5 marks, how you will solve this question? You will just write 13.5 crore. You should write. The entity is collecting the consideration for rupees 15 crore and paying a consideration of rupees 1.50 crores. Okay. 1.50 crores. You should write. In this case, the entity is not getting any control of distinct goods and services. If you are not able to remember the word distinct, not to worry. Simple write that in this case, the entity is not getting any control of any goods and services, in lieu of paying a consideration of rupees 1.50 crores. Hence, the consideration payable should be treated as reduction in revenue, just like a cashback, payback, okay, revenue. So consideration received amount in crores, you should write, or simple, you should write 15 crores. Consideration paid 1.5 crores. Net revenue 13.5 crore. If the question will ask to put some accounting entries, what should be the accounting entries? Yeah. What should be the accounting entries? Bank account debit 15 crores to bank account credit, if the payment and receipt is at a different point on time. For example, bank account credit 1.5 crore to revenue, or it could be net also to revenue. 15 minus 1.5. Alternatively, what could be the accounting entry? Alternatively, what is the accounting entry alternatively? Bank account debit 15 minus bank account debit directly 13.5 crore. Okay, this is the accounting entry. Have you understood how you need to solve this question? Yes or no? Yeah. The key is analysis. Yes. So this you need to do for securing 4 to 5 marks. Okay. And you can see it took just hardly 3-4 minutes for securing 4 to 5 marks. Yes. Yes, reference to India is not required. If you write, well and good. If you don't write, so nothing will be deducted. Okay. Is that clear? Hence, if you want to write, hence the consideration payable should be treated as reduction in revenue in accordance with Ind AS 115. Okay. Ind AS 115. But good, if you want to write, please write. Okay. Because everyone will be able to remember the name of the standard itself. Now we are moving to fourth step. What is my fourth step? What is my step number 4? Comparatively, step number 4 and step number 5 is pretty simple and smaller steps, right? The most lengthy step was step number 2 and step number 3. Determine the performance obligation, determine the transaction price. These were the most lengthiest step. What is the fourth step? Step number 4 is allocation of transaction price. Allocation of transaction price. Step number 4. Step 4. Allocation of transaction price. Just a minute. Allocation of transaction price to what? To allocation of transaction price to performance, to various performance obligation, various performance obligation. Do you have any idea about allocation of transaction price to various performance obligation? You remember the first lecture, the first day, when I have given you the helicopter view on 28th of September, when I have given you the helicopter view, do you remember? When I have given you the helicopter view, this one, standalone selling price, air condition unit, stabilizer, installation, and one free service every year, right? You remember that? Okay. So we understood that, once it is established that it is a contract with the customer, and you have also identified that, see, this contract is having, let's say, 3 performance obligation or 4 performance obligation. You have also determined that this contract has a multiple performance obligation. Okay. This contract has a multiple performance obligation, right? Fine, Khushi, Hemant, clear? So then you have also determined that what is the transaction price. You have also determined that, see, the transaction price is, let's say, 50,000 rupees. Okay. Now, the total transaction price, I can call it as a contract price. I have to allocate into multiple performance obligation. Why? Because I need to recognize the revenue also. For example, I have entered into a contract with the customer on 20th of March. And my financial year will get closed on 31st of March. But up to 31st of March, I have delivered only 1 performance obligation out of 4 performance obligation. In that case, I have to recognize revenue only for the 1 performance obligation which I have completed up to 31st March. Now the question is, अगर मुझे एक परफॉर्मेंस ऑब्लिगेशन का रेवेन्यू रिकॉग्नाइज करना है, then I need to compute what is the revenue for 1 performance obligation out of the total contract price, total transaction price. It means I am able to know out of the total contract price of, let's say, 50,000, what is my standalone revenue for AC unit, stabilizer, installation service and maintenance service. राइट मुझे पता होना चाहिए, तभी तो मैं परफॉर्मेंस, हर एक परफॉर्मेंस ऑब्लिगेशन का रेवेन्यू रिकॉग्नाइज कर पाऊंगा. So friends, it means I need to allocate my contract price, my transaction price into multiple performance obligation. But the question is, how can I compute? How can I calculate? Standard says that, as rightly mentioned by Nisha, standard says that the transaction price needs to be allocated on the basis of standalone selling price of the performance obligation. on the basis of standalone selling price of the performance obligation. Correct? On the basis of standalone selling price of the performance obligation. So friends, what standard says that? Standard says that transaction price shall be allocated on the basis of standalone. You will heard this word at a lot of times. Standalone selling price. So what is standalone selling price? Fair value of that performance obligation. Standalone selling price, SSP, Senior Superintendent of Police. No. Standalone selling price. Transaction price shall be allocated on the basis of standalone selling price of the performance obligation. Performance obligation, right? Is that clear? Is that clear? Correct, friends? Let's discuss with the help of an example. Let's discuss with the help of an example. The transaction price, let's discuss with the help of an example. The transaction price for a bundle of goods and services A, B, C, D are rupees 1 lakh. There are 4 goods A, B, C, D. Okay. And the transaction price for this entire combo package is 1 lakh rupees. These are distinct goods and services and separately identifiable in the contract and are separate performance obligation. Determine the transaction price for each performance obligation. Okay. And the standalone selling price is given as follows. Okay. So इस question में transaction price दिया है और standalone selling price भी दिया है. Standalone selling price is also given. My performance obligation, my PO. What is my PO? A, B, C, D. These are the 4 goods. SSP is given in the question. I'm writing down what is SSP. 50,000 rupees. 50,000. Let's say 40,000. 30,000. 20,000. This is the standalone selling price. This is the standalone selling price. So for each goods and services, write it here. Determine the transaction price for each performance obligation. Okay. Tell me how to allocate the transaction price. Simple, in the ratio of what? In the proportion of, in the ratio of these performance obligation. Okay. So friends, solution. This is my performance obligation. This is my standalone selling price. This is my allocation of transaction price. I'll write transaction price as a TP, transaction price. In the ratio of what? Transaction price needs to be allocated in the ratio of transaction price in accordance with Ind AS 115. I'm just solving this question. Ind AS 115 will be allocated in the proportion of, in the ratio of standalone selling price of the performance obligations. Correct? So how it is going to be allocated? What is my transaction price? 1 lakh rupees my transaction price, equal to 1 lakh, multiply by 50,000, divide by 1,40,000. Okay. Again, same. Divide by 1,40,000. Again, same. Divide by 1,40,000. Divide by 1,40,000. The total will comes out at 1 lakh rupees, which is the transaction price. The transaction price in this case is 1 lakh rupees. So transaction price, which is 1 lakh rupees, transaction price rupees 1 lakh. Rupees 1 lakh will be allocated, right? So this is how this transaction price has been allocated. Number one. Number one. Price, determine the standalone selling price. Standalone selling price will be the fair value of the performance obligation, which is on the base. So let's say the entity is selling a package of air condition, stabilizer, installation, and maintenance service. Okay. So, but the entity also sells all these goods and services separately. The entity used to sell maintenance service separately. The entity also provides the installation service. The entity is also selling stabilizer, and the entity is also selling air condition. It means there is the observable price. The observable price of the goods and services are available. The fair value of the goods and services are available. The entity is selling those goods and services separately. Okay. Selling separately. So for example, the entity is selling air condition unit at 45,000 rupees. Let's say, let's come to the helicopter view. For example, the company is individually selling the air condition unit at 45,000, stabilizer at 5,000, installation at 2,000, maintenance at 3,000. So the entire package value is 55,000, but the entity is selling the entire package at 50,000. What does it mean? It means the entity is giving a discount on this entire package of 5,000, right? So technically, we have allocated the transaction price of 50,000 in the ratio of standalone selling price of this performance obligation. So technically 5,000 rupees of discount we have allocated in all these four performance obligations. So technically, what is the standalone selling price? It is the fair value of the individual selling price. Fair value of the individual selling price of the performance obligation, right? But what happened? If standalone selling price is not identifiable or not available, the fair value is not available, the entity is not selling the goods and services separately, okay, then what happened? If the standalone selling price is not identifiable, what happens in that case? Tell me what to do in that case. The first priority is of course, the first priority is you need to compute the standalone selling price on the basis of fair value. You just take that. Second, if standalone selling price of the performance obligation is not identifiable, means not available, in that case, estimate the standalone selling price. Sir, how to estimate the standalone selling price? Pooja is saying similar business in market. You're right, Pooja. But standard has given you some approaches. What are the approaches? If the standalone selling price is not identifiable, then estimate the standalone selling price. Estimate the standalone selling price. Estimate the standalone selling price. For estimating the standalone selling price, standard has given you three approaches. What are those three approaches? Approach number one. Approach number one is AMMA approach. What is the full form of AMMA approach? Adjusted market assessment approach. Adjusted market assessment approach. AMMA approach. Adjusted market assessment approach. Okay. Adjusted market assessment approach, AMMA approach. Number two, right? Cost plus margin approach. Cost plus margin approach. Number three, residual approach. What is meant by Amma approach? What is meant by Amma approach? You are not selling that goods and services separately, but your competitors are selling that goods and services separately, right? So you need to take the competitor selling price adjusted with entity cost and margin, adjusted with entity cost and margin. For example, your competitor is selling that goods at 10,000 rupees. Okay. Why? Because he is doing the bulk buying. Okay. So let's say you are selling a package of air condition, installation, warranty, I mean to say maintenance service and stabilizer. Okay. You are not selling stabilizer separately. You are always selling in the package. Okay. Your competitor is selling the stabilizer. Your competitors are selling stabilizers separately. They are selling at a price of 5,000 rupees. They are doing bulk buying because they are only into the business of stabilizer, right? So probably for them, the cost of stabilizer to them is able to sell this stabilizer with air condition, for example, 200 or 300 units. Okay. So selling price for your competitor is 5,000 rupees. Probably for you, it will be 5,500 rupees because the stabilizer will cost you more in comparison to your competitor. Okay. So friends, Amma approach is adjusted market assessment approach. You need to take a price of your competitor, adjust with your cost and margin. Okay. Adjust with your sense of market assessment, your sense of business, do the adjustment, some sensitivity, do some adjustments, right? And then you will arrive at the standalone selling price of that goods. For example, you will arrive that, okay, if my competitor who is selling stabilizer, the price at which he is selling is 5,000 rupees, probably for me, it should be 5,500 rupees. Why? Because he is doing bulk buying. He is doing bulk selling also, right? But I am selling limited amount of air condition, which is including the stabilizer. So for me, it should be 5,500. You need to estimate. It is not always accurate. Accurate तो पहले वाला था ना, fair value, कि आप कितने पे अलग से बेचते हो. What is your observable price? What is your observable input to determine the price? Okay. But since you are not selling it separately, you need to take a market value. You need to take a market price and you need to adjust with your cost and margin. Sir, what happens if the entity will not adjust? Then even that is okay. Even that is okay. मैं प्रैक्टिकल लाइफ में बात कर रहा हूं, बट इन एग्जामिनेशन क्वेश्चन, if the question will come in the exam and it is written that the entity is not selling the goods and services separately, but the competitor is selling this goods, which is, let's say, performance obligation B or C, at a price of 5,000 rupees. Okay. And in the next line, it is written that the entity has adjusted 10% because the entity's cost is higher than the competitor cost. So the by 10%, and hence entity, for this entity, the standalone selling price of performance obligation may need to be adjusted. If these kind of hints is given in the question, you need to adjust your standalone selling price by using the market price. I hope it is clear to all of you. I hope it is clear to all of you. Yes. Adjusted market assessment approach. Adjusted market assessment approach. Shall I write an example? Shall I write an example of this? Adjusted market assessment approach. The entity is selling a package of goods and services. AC, stabilizer, installation, and warranty. and maintenance. Service. The entity is not selling stabilizer separately. The competitors are selling stabilizer at rupees 5,000. Okay. The entity is selling a package of goods and services. Okay. And determine these 4 performance obligation. The competitors are selling stabilizer at 5,000. The entity estimates that the purchase cost, to its competitor. Okay. So probably when the entity has purchased the goods, AC, stabilizer, everything as a package, when the entity has bought, probably the entity has paid more than 10%, right? So what is the standalone selling price of stabilizer to the entity? What is this? So friends, in this case, the entity needs to estimate the standalone selling price using what approach? Using AMMA approach, using adjusted market assessment approach. Okay. Hence, the standalone selling price may be 5,000 plus 10% of 5,000. That is 5,500 rupees. That is 55. Okay. Solution. Okay. So we understood AMMA approach. Second one is cost plus margin approach. Cost plus margin. The entity is not selling the goods and services separately, that performance obligation separately, but the entity knows the cost. Right? But the entity know the cost. Okay. Entity know the cost. So in that case, adjust cost of goods and services with the expected margin. Example, sir, example, cost plus margin approach. Cost plus margin approach. So A Limited, AG Limited, Alok Garg Limited, AG Limited sold a software and also provides installation service to the customers. The entity does not provide installation service separately. The entity does not provide installation service separately and always used to sell software and installation together. Both of these are distinct goods and service this entity is not providing, but the customer can get the installation from anywhere. Okay, so it is a distinct goods and services. Remember step number 2, we have discussed at length. We have spent around 1.5 classes on determination of performance obligation, right? Both of these are distinct goods and services, and hence two separate performance obligation. The entity, okay, the entity has engaged a software engineer, who helps entity who helps entity in installation of software on the customer premises. This engineer charge 5,000. This engineer charge rupees 5,000 on every installation performed. Normally, the entity earns 20% margin on the goods and services delivered to the customer. Determine the standalone selling price of installation service. Whether question is clear? Question is clear or clear? Is it clear from mind or clear from mind? Friends, first priority. You need to recognize you need to identify or determine the standalone selling price on the basis of fair value, observable price. If this entity would have sold the software and installation separately, or also used to sell the installation separately, probably will take that price and allocate, or I can take cost plus margin approach. So by applying cost plus margin approach, I know the cost. I know that what is the cost incurred on this goods and services. I know the cost. The cost is, in this case, the cost is 5,000 rupees I am paying to the engineer for every installation performed. And in my business, I expect a 20% margin whenever I am selling goods and services. तो मैंने 5,000 रुपए दिए इस काम को कराने के लिए, बट मैं कस्टमर से कितना चार्ज करूंगा? नॉर्मली 6,000 रुपीज. So in this case, cost plus margin approach is appropriate as the entity knows the cost of the performance obligation and the margin in the business it expects. Hence, the standalone selling price is what? Is 5,000 plus 20% margin of 5,000. That is 6,000 rupees. I hope this is clear to all of you. I have written this question. The third one is residual approach. Very simple approach. Residual approach. Okay. So this approach is hardly used in real life, but in examination, if the question will come, it's a simplest approach. What is residual approach? What is residual approach? What is residual approach? The entity is selling a package of three goods. A, B, and C. Three goods, package of three goods A, B, and C for rupees 50,000. The entity used to sell B and C separately also, but of B and C is 20,000 and 15,000, 20,000 and let's say 25,000 respectively. Determine the standalone selling price of A in this transaction. So friends, using the residual approach, the balancing figure will be A. What is that? Performance obligation, standalone selling price, performance obligation A, B, and C. What is my standalone selling price value? 20,000 for B, 25,000 for C. So remaining is A is equal to what? A is 50,000 minus 20,000 minus 25,000. Okay. So what is that? This is 5,000. This is 5,000. This is the value. This is the value of A using the residual approach. Using the residual approach, this is the value of A. Okay. Clear on all these approaches, how to allocate the transaction price, right? So it is a fair value. Okay. But if the fair value cannot be estimated, in that case, you can go with the what? You can go with the AMMA approach, cost plus margin approach, or residual value approach. Okay. I hope it is clear to all of you. Yes. And I have given the example of all of these. Yes, Abrikesh, please ask your question.
Yeah. Good morning, sir. In case of a residual method, where we have kept 5,000 as a balancing figure, so when we allocate in proportion, it will be the same.
You are charging, 50,000 rupees. And you are selling two products separately also. मतलब उसका standalone selling price तो आपको पता ही है. अब आपने तीसरा प्रोडक्ट साथ में दिया, तो अगर वो तीसरा प्रोडक्ट ज्यादा का है तो भी आपने टोटल कम लिया, तो इसका मतलब वो डिस्काउंट जो है वो डिस्काउंट तीसरे प्रोडक्ट के लिए है, राइट? बिकॉज you are selling these two products separately also, and while selling separately you are not getting any discount, correct?
Yes.
So by default it will be the residual value of that product. Otherwise, why the difference between the total? For example, in this case, the total standalone selling price, the aggregate of the standalone selling price of 4 product was 140. The transaction price was 1 lakh. So what is the difference between 140 and 1? Technically, the difference is discount on the package. Discount है ना? तो discount की वजह से ही your transaction price is different from the standalone selling price. Okay.
Okay. Good. Right. Thank you.
So friends, it's 8:21 now, and I have explained you the concept of allocation of transaction price to various performance obligation. So let's have a 10 minutes break. And after break, we will discuss a lot of illustration and the two concepts of allocation of discount and allocation of variable consideration, which is the most awaited question in the examination, right? How to allocate discount in the various performance obligation, what is the treatment of variable consideration in the various performance obligation, right? While allocating the transaction price. Okay. So it's 8:22. Let's have a 10 minutes break and then we will start discussing the illustration on this aspect. Students, so we discussed that the standalone selling price is more like a fair value. It is computed, identified on the basis of the fair value observable inputs, right? But if it is not there, in that case, you will discuss the allocation of discount, right? So while we talked about that, whatever is the transaction price, the transaction price needs to be allocated to the standalone selling price on the basis of performance obligations, on the basis of a standalone selling price of performance obligation. Now question comes, sir, how to allocate the discount to the performance obligation if there are multiple buckets. There are multiple buckets of the performance obligation, and the discounts are also provided in the smaller buckets out of the larger buckets. Sir, we haven't understood this aspect. Not to worry. Okay. So we'll explain this concept with the help of an example. So there are two typical aspects. There are two important aspects, friends, which we are going to discuss in this case. Number one, important concepts. And whenever a question will come, the question will largely come on this aspect, important concepts. Concept number one, allocation of discount. Allocation of discount to performance obligations. Number two, allocation of variable consideration to performance obligation. Performance obligation. Allocation of discount to performance obligation, allocation of variable consideration to performance obligation. Okay. Yes. Now, friends, for example, the transaction price of A, B, and C, the entity selling three goods. Okay. Entity selling three goods. Okay. There is a package of three goods and the transaction price is 15,000 rupees. Entity is also selling B and C together at 8,000 rupees. Okay. Together at 8,000 rupees. So the entity is selling a package of goods A, B, and C. A, B, and C together for rupees 15,000. Together for rupees 15,000. Okay. The entity is also selling a package of B and C. Package of B and C at rupees 8,000. At rupees 8,000. Okay. Determine the allocated transaction price of A, B, and C so that the revenue can be recognized for these performance obligation. Determine the transaction price. Determine the transaction price of A, B, and C separately so that revenue can be recognized on these performance obligations separately. Okay. Okay. Now the standalone selling price. Let me give you the standalone selling price. Let me give you the standalone selling price in for these three goods and services. This is the performance obligation. A, B, and C. This is the price 10,000, 8,000, 2,000. This is a standalone selling price. I need to know the allocated transaction price. What is my transaction price? 15,000. What is my total of the standalone selling price? 20,000. In this question, the standalone selling price of ABC is given, right? Which is 10,000, 8,000, 2,000. In this question, the transaction price is given, which is 15,000. So 20,000 का पैकेज कितने में बेचा? 15,000 में. What does it mean? Vignesh, what does it mean? 5,000 discount. You're right, Nisha. 5,000 discount. Okay. Sold at discount. You're right, Vignesh. But so this is the bigger bundle. This is the bigger package A, B, and C. The company is also selling another package. What is the smaller package? What is the smaller package? A smaller package is B and C. A smaller package is B and C, right? B and C. तो बड़ा वाला जो पैकेज है A, B and C. So in this case, the entity used to sell two package. Package A. Package A. Package 1, not A, package 1. Package 1 includes A plus B plus C. So the entity used to sell at 15,000 rupees. Package 2. The package 2 is having only B and C. Package 2 is having only B and C. The entity is selling at 8,000 rupees, right? It is smaller package. It is smaller package. However, the price, the total price of B and C, however, the total price of B and C, so this is what? This is the transaction price. But what is the price? But what is the normal price? What is the normal price? What is the standalone selling price? For this package it is 20,000. For this package it is 10,000. So what is the discount in this case? What is the discount in this case? For this entire package, 5,000. For this entire package, 5,000 rupees discount. For this smaller package, 2,000 rupees discount. Have you understood the question? But in this kind of a situation, how discount needs to be allocated? How discount needs to be allocated? Friends, for determination of transaction price, for determining transaction price, standard says that for determining transaction price, standard says that for determining transaction price, for determining allocated transaction price, allocate the discount on the smaller package, allocate the discount on the smallest bucket first, then to the entire contract. So it says that for determining the allocated transaction price, the discount needs to be allocated. The discount needs to be allocated first in the smallest bucket, then to the entire contract, okay. Hence in this case, remove A first. What is the standalone selling price of B and C? What is the transaction price of B and C? What is the transaction price of B and C? Friends, tell me. So, or write it like this, A, B and C, okay. Now, let's talk about B and C only, B and C. Okay. So for B and C, What is SSP? What is SSP for BNC? For BNC, SSP is this one. 8,000 and 2,000. Okay. This is BNC. What is revised price? What is revised price for BNC? Revised price. 8,000 multiply by 8,000 divide by 10,000. 8,000 multiply by 2,000 divide by 10,000. So it comes out at 8,000. Right? So first we have come to the revised price. Now revised price for A, B, and C. Revised price for A, B, and C. Okay. SSP. What is my SSP for A, B, and C now? 10,000 for A, 6,400 for B, 1,600 for C. So now my revised standalone selling price comes out at 18,000. Revised selling price comes out at 18,000. Okay. Now allocate the transaction price. Allocate the transaction price. Okay. Allocate the multiply by 6,400 divide by 18,000. 15,000 multiply by 1,600 divide by 18,000. Friends, the standard says that the transaction price needs to be allocated in the ratio of standalone selling price of the performance obligation. But in case there is a discount, on the smaller bucket than to the entire contract, standard says that you need to first allocate the discount and then determine the revised price. Okay. Then the final transaction price needs to be allocated to the revised standalone selling price of the performance obligation, right? To the performance obligation. Is that clear? Is that clear? I hope it is clear to all of you. Yes. So this is how this revenue recognition needs to happen. This is how this transaction price needs to be allocated. I believe it is clear to all of you. Yes. Clear? Now the second part is allocation of variable consideration. Allocation of variable consideration. Allocation of variable consideration. Mamta, I'll answer your query. Just hold on for a minute. Okay. Let me complete this and then ask your query. Probably you will get your answer when I'll move on and I'll pick some illustration also. Allocation of variable consideration to performance obligation. Okay. So friends, normally what happens when there are multiple performance obligation? There is a contract price. Okay. So I am an entity. I have entered into a contract with Mamta to construct her house. Okay. I told Mamta that Mamta, I am a contractor and I will construct your house and I will also provide you the maintenance service for the next 5 years. Okay. Means if there is any problem, for example, any seepage will be there, any sanitary fitting issue will be there, any electrical fitting issue will be there. So I will give you the maintenance service for the next 5 years. Okay. So I am providing 2 services to Mamta. 1, construction services. Number 2, maintenance services. This maintenance service will start when the house will get constructed. Right? So how many performance obligations are there here? How many performance obligations are there? The performance 1 or 2? How many performance obligations? There are 2 performance obligation, Abrikesh. You are right. There are 2 performance obligation. Okay. in this case, there are two performance obligation. Now, Mamta told me that, sir, Diwali is coming and on rupees for maintenance service on yearly basis. So yearly maintenance, he will pay me 10,000 rupees per annum and 1 crore rupees for the construction of her house. Okay. Now, she told me that, sir, please construct my house before Diwali. Please hand over me before Diwali and I will pay you if you will deliver my house before Diwali. I will pay you 5 lakh rupees bonus or incentive. Okay. Friends, what is my fixed consideration in this case? What is my fixed consideration in this case? 1 crore rupees. So in this case, I have fixed consideration of 1 crore rupees for construction, right or wrong? Can you please quickly participate on the chat box and write the answer? My question is, what is the fixed consideration in this case? For construction, 1 crore rupees. For maintenance, 10,000 rupees per annum. Okay. What is the variable consideration in this case? 5 lakh rupees. Right, Mamta? 5 lakh rupees. So let's say 1 crore rupees is the construction price. 10,000 multiplied by 5. 50,000 is the 5-year maintenance price. The total transaction price is 1 crore 50,000 rupees. 5 lakh rupee is the variable consideration, right? Transaction price. What is my transaction price? My total transaction price is 1 crore plus 5 lakh plus 50,000. So what is the allocated transaction price to construction and to maintenance? So friends, standard says that variable consideration needs to be allocated to those performance obligation only to which it always relates to, right? To which it always relates to. Okay. So friends, now whatever I've told, so let me put the notes for you guys. A Limited entered into the contract with B for construction and maintenance services for 5 years for its house. A Limited has offered that it will give him incentive of rupees 5 lakh for early completion of construction of the house. B has a track record of early completion, right? Correct. So how many performance obligation are there in this question? There are two performance obligation: construction service, maintenance service. Construction service, and maintenance service. Okay. Fixed consideration is there for construction, yes. For maintenance, yes. Variable consideration is for construction, yes. For maintenance, no. Right? This is how it has to happen. This is how it will be there. Okay. Anyone who has any question? Anyone who has any question? If not, then
need for this particular clause for allocating variable consider, or is there any, multiple chances if variable consideration is to be allocated to
so
the different purpose?
uppercase, first of all, talking about the variable consideration, in this case, there was only two performance obligation, right? So one, we
Yes, yes,
understood that it is construction, second one is maintenance. What happened if
yes.
there would be 3-4 performance obligation and the variable consideration depends upon the first three? The variable consideration is relating to the first three performance obligation, not with the fourth performance obligation. In that case, that 5 lakh rupees has to be allocated in the ratio of the standalone selling price of the first three performance obligation.
Okay, okay.
Right. So that was the reason. So what is
Thank
the
you.
essence and what is the background to say this? The point is, whenever there is a variable consideration, of course, first, what was the third step? The third step was the determining the transaction price. If somebody will come to you and ask what is the contract price of this entire contract, you will say 1 crore plus 5 lakh plus 50,000. The total contract price is the total transaction price is 1 crore 5 lakh 50,000. Now somebody will ask you what are the performance obligation. You will say there are two performance obligation: construction and second one is maintenance for 5 years. Then somebody will ask you, what are the value of these performance obligation? Means how to allocate the transaction price. You will say, I need to allocate the transaction price in the standalone selling price. Okay. But in this case, I will not allocate in the ratio of 1,05,000 and 50,000 or whatever. What I'll do, 1 crore is the value of the construction and 50,000 is the value of the maintenance. This variable consideration of 5 lakh is related to the first performance obligation only, and hence we will not allocate this 5 lakh into the ratios of the multiple performance obligation. We will allocate only this variable consideration, we will allocate only to those performance obligation to which it is related. It is not related to maintenance, we will not do that. Okay. So time of recognition will be impacted. Okay, in that case. Is that clear? Is that clear, friends? So friends, let's discuss illustration number 54 of ICAI study material. Illustration number 54. Okay. Yeah. Shall we discuss illustration number 54? I would request all of Mamta, you have some question. Please unmute yourself and ask the question. Mamta, can you ask your question? Mamta, can you please unmute yourself and ask the question? Or if you want to ask your question, you want to write on the chat box, you can do that also.
गुड मॉर्निंग सर.
Good morning, Mamta.
सर लास्ट एग्जांपल में हमने रिवाइज्ड प्राइस फॉर एबीसी पैकेज जो किया एसएसपी में, तो इसमें 18,000 जो हमने कंसीडर किया सर, तो बैलेंसिंग फिगर भी तो ले सकते थे ना. जैसे ए बी बी सी का हमें सेपरेटली पता है, तो ए का बैलेंसिंग में आ जाएगा.
ए का
बैलेंसिंग फिगर 15,000 एबीसी का पैकेज का पता है हमें प्राइस, और बीसी का सेपरेटली पता है, देन ए का बैलेंसिंग फिगर में नहीं आ सकता.
So Mamta, what happened? इस क्वेश्चन में, लास्ट क्वेश्चन में, this question has given you the standalone selling price of all these performance obligation A, B, and C का 10,000, 8,000 and 2,000, right? Okay. Is that clear? So इस क्वेश्चन में आपको तीनों का प्राइस दिया हुआ है, तीनों का स्टैंडअलोन सेलिंग प्राइस दिया है. ओके. नाउ द ट्रांजेक्शन प्राइस इज डिफरेंट फ्रॉम द स्टैंडअलोन सेलिंग प्राइस पुट टुगेदर. सो 20,000 रुपए टोटल है, लेकिन 15,000 में पूरा पैकेज मिलता है. ओके. इससे जो छोटा पैकेज है विच इज बी एंड सी, उसकी वैल्यू 10,000 है एंड वो वाला पैकेज मिलता है 8,000 में, वो बिकता है 8,000 में, राइट? तो सबसे पहले हमने क्या किया, सबसे पहले हमने डिस्काउंट किया. पहली बात तो जो आप कह रहे हो रेसिडुअल नहीं हो सकता, तो इसमें क्वेश्चन में स्टैंडअलोन सेलिंग प्राइस दिया है. हमारे को क्या करना है, वी नीड टू डिटरमाइन हाउ टू एलोकेट दिस ट्रांजेक्शन प्राइस इनटू द स्टैंडअलोन सेलिंग प्राइस ऑफ दिस परफॉर्मेंस ऑब्लिगेशन. और इस क्वेश्चन में दो तरह के डिस्काउंट है. वन डिस्काउंट विच इज ऑन द ओवरऑल पैकेज, द सेकंड डिस्काउंट विच इज ऑन द स्मॉलर पैकेज. सो फर्स्ट आई हैव एलोकेटेड द डिस्काउंट इनटू द स्मॉलर पैकेज. पहले मैंने स्मॉलर पैकेज में डिस्काउंट डाल दिया. उसको डालने के बाद रिवाइज स्टैंडअलोन सेलिंग प्राइस निकल के आया, और उससे उससे माय ट्रांजैक्शन प्राइस विच इज 15,000 एंड माय टोटल स्टैंडअलोन सेलिंग प्राइस बिकम 18,000. वो 20,000 से 18,000 आ गया. ठीक है. अब
डबल डिस्काउंट हो गया.
हाँ, नहीं डबल डिस्काउंट तो हो गया, लेकिन डबल डिस्काउंट आपका किस एक्सटेंट तक हुआ, 5,000 तक ही हुआ ना. मतलब आपका नेट नेट तो 15,000 पे आपने रिकॉग्नाइज किया ना. होता क्या है, ये डबल डिस्काउंट, यू आर सेइंग दैट सर वी हैव आल्सो प्रोवाइडेड डिस्काउंट ऑन बी एंड सी, करेक्ट?
यस सर.
दिस इज व्हाट यू आर सेइंग. सो नॉर्मली व्हाट हैपेंस ममता, जब भी आप पूरे पैकेज में डील करते हो, राइट, जब भी आप कॉम्बो डील करते हो और आप एक स्मॉलर कॉम्बो की भी डील करते हो, यू कैन नॉट से दैट कि मेरा जो ओवर एंड अबव डिस्काउंट है वो सारा का सारा ए पे ही होगा. यू कैन नॉट से दैट, राइट? सो जनरली जब भी पैकेज या बल्क डिस्काउंटिंग होती है, तो उस डिस्काउंटिंग का एलोकेशन सारे प्रोडक्ट पे जाता है, सारे प्रोडक्ट पे, अनटिल एंड अनलेस क्वेश्चन में ऐसा लिखा हो कि लीगल रिस्ट्रिक्शन है कि इनका प्राइस इससे कम हो ही नहीं सकता. अगर पूरे पैकेज पे भी डिस्काउंट है, तो पूरे पैकेज पे जो डिस्काउंट है 3,000 रुपीज एडिशनल, उस 3000 को you need to allocate in the revised standalone selling price of all the performance obligation, right? बिकॉज उसमें ये आइडेंटिफाई करना डिफिकल्ट हो जाता है कि इस पूरे पैकेज को बेचने की वजह से सिर्फ ए का ही प्राइस कम किया गया है या बी और सी पे भी और बेनिफिट दिया गया है, राइट? इसीलिए वो पूरे पे ही डिस्काउंट एलोकेट किया जाता है. Is that clear?
Okay.
Right? So this is the concept, Mamta. Abrikesh, do you have
Sir,
any question?
Abrikesh.
Yes, Abrikesh.
Yes, sir. Sir, the same example what she has asked. So what I want, I mean, in case of a B and C, we have arrived at the 6,400 and 1,600. That is the allocated price at first instance. Okay.
Yes.
Now
Yes.
the difference between the package, I mean, the transaction price of A, B, and C and B and C, 7,000. So can't we put straight away 7,000 to A? It is also discounted price. So what is the, I mean, logic then considering so complex calculation?
Abrikesh, there are two aspects to it. If the price, standalone selling price of A would not have been given, अगर standalone selling price A का नहीं होता, in that case, you can opt for the residual approach, right? आप उसका रेसिडुअल अप्रोच यूज कर सकते थे और आप क्या करते कि बी एंड सी का 8,000 रुपीज, देन ए वैल्यू विल बी 7,000 रुपीज, राइट?
Yes.
Okay. In this case,
Yeah.
the entity which is selling product A individually, the entity is selling at 10,000 rupees. The entity which is selling B and C in combo,
Yes.
it is selling at 8,000 rupees, right? सो एंटिटी जब ए को बेचती है स्टैंडअलोन तो 10,000 में बेचती है, बी और सी जब बेचती है तो 8,000 का बेचती है, टोटल 18,000 का टोटल.
Yes.
तो टोटल प्राइस कितना हो गया? 18,000 हो गया.
15.
टोटल प्राइस, टोटल स्टैंडअलोन सेलिंग प्राइस 18 हो गया. 8,000 फॉर बी एंड सी,
Sorry.
10,000 फॉर ए.
Yeah.
इस 18,000 के सामान को 15,000 में बेच रही है, तो क्या करना पड़ेगा? इस 15,000 को एलोकेट करना पड़ेगा ना 18,000 की रेशियो में. सो 18,000 की रेशियो क्या है? 10,000 is to 6,400 is to 1,600.
Yes, sir.
So
Yes,
what
that is clear, sir.
what you and Mamta were telling, you were telling about residual approach. वो तब आप अप्लाई करते, you will apply when it is the value of A is not given in the question. When the value of A is not given in the question, right? Is that clear?
No, sir. I am asking is no, sir. What I was asking is what is the logic in doing this same exercise again? So I agree if standalone price of A is given. Still, I mean, why to make it complex? What is the logic? But suppose we have considered 7,000.
The logic is Abrikesh, when you are selling into a package, जब आप पैकेज में बेचते हो, then you cannot say that कि मेरा जो पूरा पैकेज का डिस्काउंट है बचा हुआ सारा डिस्काउंट ए का है. You cannot say that. तभी तो पहले स्मॉलर पैकेज में डिस्काउंट को एलोकेट किया और उसके बाद जो बचा हुआ डिस्काउंट वो तीनों में एलोकेट किया. अब मान लो देखो, मैं एफआर और ऑडिट, फॉर एग्जांपल आई एम अ टीचर एंड आई एम टीचिंग एफआर एंड ऑडिट. माय एफआर स्टैंडअलोन सेलिंग प्राइस इज 5,000 रुपीज. माय ऑडिट स्टैंडअलोन सेलिंग प्राइस इज 5,000 रुपीज. ठीक है, मैं 5,000 में एफआर बेचता हूँ, 5,000 में ऑडिट बेचता हूँ, टोटल 10,000. अब मैंने आपसे 8,000 रुपए लिए, मैंने आपसे 8,000 रुपए लिए. तो अब मुझे ये नहीं पता ना, अगर मैंने 8,000 रुपए लिए हैं तो 2,000 रुपए कम मैंने एफआर का लिया या मैंने ऑडिट का लिया है. तो मैं क्या एज्यूम करूंगा कि पूरे पैकेज को बेचने की वजह से, है ना, मैंने पूरे पैकेज पे डिस्काउंट दिया. तो दिस पैकेज डिस्काउंट हैज टू बी एलोकेटेड बिटवीन द परफॉर्मेंस ऑब्लिगेशन व्हाटएवर आई हैव डिलीवर्ड. करेक्ट? वो तो सिनर्जी डिस्काउंट है ना. इज दैट क्लियर?
Yes, sir.
Okay. So any other question, students? Raj, do you have any question? Student, do you have any question? Please raise your hand. Shall we go to the illustration?
Yes, sir.
Okay. So let's discuss the illustration number. What is that illustration? Illustration number 54. So let me take you to the PPT. Are you able to see illustration number 54? Are you able to see illustration number 54?
Yes, sir.
Okay. Yes. An entity enters into a contract with a customer to sell products A, B, and C in exchange for rupees 10,000. The entity will satisfy the performance obligations for each of the products at different points in time. So there are three performance obligations A, B, and C. The transaction price is rupees 10,000. Okay. The entity will satisfy the performance obligations for each of the products at different point in time. The entity regularly sells product A separately, and therefore the standalone selling price is directly observable. The standalone selling price of product B and C are not directly observable. So A का प्राइस तो पता है क्योंकि सेपरेटली सेल करते हैं, बट B and C का नहीं पता. Because the standalone selling price for product B and C are not directly observable, the entity must estimate them. To estimate the standalone selling prices, the entity uses the adjusted market assessment approach for product B and the expected cost plus margin approach for product C. In making those estimates, the entity maximizes the use of observable inputs. The entity estimates the standalone selling prices as follows. Product A, which is directly observable because entity used to sell this product separately. Product B, the entity has estimated using the AMMA approach. Product C, the entity has estimated by using the cost plus margin approach. So the total price comes out at 15,000 rupees. Determine the transaction price allocated to each product. The transaction price is 10,000. This company has estimated the standalone selling price, okay, which is 5,000, 2,500, 7,500. The total of standalone selling price is 15,000. So how to allocate this 10,000? This has to be allocated in the ratio of what? 5 is to 2.5 is to 7.5, right? इसी ratio में allocate हो जाएगा, correct? 5,000, 10,000 multiply by 5,000 divided by 15,000. Correct? Yes or no? 10,000 multiplied by 2,500 divided by 15,000. 10,000 multiplied by 7,500 divided by 15,000. So this will be your allocated transaction price. The transaction price is 10,000, which is allocated in the ratio of A is to B is to C. Correct? Any doubt?
So, sir, here where, I mean, yes, sir, sorry, Abrakesh.
Yes, Abrakesh.
Hello. Sir, so here what is the, importance of giving the method in the column? Here we have distributed it straight away in the ratio of standalone price. We 10,000 divided by 15,000 into respective standalone price.
So Abrakesh, the stand.
So how it's
Yeah. So let me tell you. So the reason for giving these, approaches is just to give you a flavor, right? There is no use from the solution perspective because the ask of the question is allocate the transaction price. And you need to allocate the transaction price in the ratio of standalone selling price, right? So this question, at times the question will give you a lot of information, okay? So these lot of information will probably to confuse you, to check your patience,
that's
to
okay.
check your
Got
understanding.
It. Yes,
right?
yes.
So there is no use.
Got it.
There is no use. Okay.
Okay.
The use
Got
was
it,
only to estimate, and this question has already given you the standalone selling price.
Yes,
Correct?
yes. Okay.
Got it. इसका use कब होता? So let me also elaborate this. इसका use होता, for example, if this kind of a question will come in exam, the weightage could be 2 to 3 marks because you just need to allocate, right? You read the question, you need to allocate. But for example, if I have to draft this question, redraft this question and make this question for 5 to 6 marks, what I will do? I will say that the company used to sell the product. The competitors are selling this product B, okay, at rupees, let's say 2,000. And the company expects that the company may have 25% cost over and above which their competitors were having. Okay. In that case, you have to apply your bent of mind. Okay. So my competitor price is given. It means I have to apply the adjusted market assessment approach for determining the standalone selling price of product B. Then in the question, I will write that since the company is not selling the product C also separately, but the company used to get this product from the third party, and the company has to incur the cost of rupees, let's say 5,000 rupees, cost of 5,000 on each of these product. And the normal business margin, the normal profit margin, which the entity expects on the sale of goods and services is 50%. So in that case, the trigger should come into your mind of the case that, oh, it means cost is given for this product and the margin is also given. It means I can apply cost plus margin approach for estimating the standalone selling price of product C. So in this question, I have redrafted and I have also asked you to compute the standalone selling price of product B. I have also asked you to compute the standalone selling price of product C, right? So in that case, you have to write that I have used AMMA approach. I have used cost plus margin approach. Okay.
Okay. Thank you, sir.
Perfect. Friends,
Hello.
now let's discuss illustration number 56. Illustration number 56.
So can you take that question? I have sent it afterward.
Which question?
I have sent an image.
Who is there?
Raj.
Sorry, I'm not able to hear you. Who is there?
Raj.
Raj. Okay. So Raj, where you have sent the question on the chat box?
Yeah.
So is it related to ICAI study material, Raj? So
No,
I'll
it's
directly open from the study material.
not study material. It's from RTP or MTP.
RTP or MTP. Okay. So this departmental store question, KK Limited, right?
Loyalty points question.
Loyalty point question. Okay, so Raj, can you hold on for some time? Let me complete this concept, step number 4. Then I can pick up that question, right? Okay. Because I'm in the mid of a concept.
Yeah, that's
and
why
that loyalty point is related to the step number 3. So let me complete this step number 4.
Okay, sir.
So we discussed the allocation of discount, allocation of variable consideration. Okay. Now let's discuss illustration number 56, which talks about allocation of variable consideration. An entity enters into a contract with a customer for 2 intellectual property licenses. Licenses A and B, which the entity determines to represent 2 performance obligations, each satisfied at a point in time. There are 2 licenses, okay? The standalone selling price of license A and B are 16 lakh and 20 lakh respectively. So in this question, standalone selling price is given. There are 2 performance obligations. These are the 2 licenses, and license A, license B. Standalone selling price 16 lakh, 20 lakh. The total standalone selling price is 36 lakh. The entity transfer license B at inception of the contract and transfer license A 1 month later. Means, for example, on 1st of March, the entity transfer license B. Then on 1st of April, the entity is transferring the license A. Okay, the entity is transferring the license A. Case A, first situation. Variable consideration allocated entirely to one performance obligation. The price stated in the contract for license A is a fixed amount of 16 lakh. And for license B, the consideration is 3% of the customer's future sales of product that use license B. For purpose of the allocation, the entity estimates its sales-based royalty, that is the variable consideration, to be rupees 2 lakh. Allocate the transaction price. Case B, variable consideration allocated on the basis of standalone selling prices. The price stated in the contract for license A is the fixed amount of 6 lakh. And for license B, the consideration is 5% of the customer's future sales of product that uses license B. The entity estimate of the sales-based royalty is rupees 30 lakh. Here, license A is transferred 3 months later. The royalty due from the customer's first month sales is rupees 4 lakh. Allocate the transaction price and determine the revenue to be recognized for each license and the contract liability, if any. Have you understood the question? Have you understood the question? Of course, no. Of course, no. I believe your answer should be no. Very good. Okay, so let me take this question on the Excel file. So let me take this question on the Excel file. Just hold on for a minute. Right. Important question. So it's an important question. So just hold on for a minute. I should take this question. Stop share. Just give me a minute. Okay. This is an important question. And if this kind of a question will come in exam, it will be probably for 10 marks, 8 to 10 marks. Okay. Yes, now I'm sharing my Excel file. Yes, just a minute. I hope my Excel file is visible now. My Excel file is visible now. Yes, is it visible? Whether my Excel file is visible? Yes?
Yes, sir. To me, it's yes.
Okay, perfect, perfect. So let's talk about case A. What is given in the question? In the question, it is given that there are two licenses. License A, solution. There are two performance obligations. There are two POs. License A and license B. License A and license B. Okay. What is the price of these licenses? The price is two performance obligations, standalone selling price 16 lakh and 20 lakh respectively. 16 lakh, 20 lakh. 16 lakh, 20 lakh. What is the total price? The total price is 36 lakh. This is the standalone selling price given in the question. Then what is written in the question? It is written that the entity transfer license B at inception of the contract and transfer license A 1 month later. So delivery of performance obligation. This license B has been delivered at the inception of the contract, and this is 1 month later. Okay. So have you understood the first part, friends? Have you understood the first part? Yeah. Okay. Now, what is the case A? Now we are discussing the first case, case A. The price stated in the contract for license A is a fixed amount of 16 lakh. And for license B, the consideration is 3% of the customer future sale of product that uses the license B. Okay. For purpose of allocation, the entity estimate that the sale-based royalties, that is the variable consideration, is rupees 20 lakhs. Allocate the transaction price. So in this case, what it is saying that for license B, for license A, it is the fixed consideration. So for license A, in case of case A, for license A, it is the fixed consideration. It is the fixed consideration. But for license B, it is saying that For license B, the price is on the basis of sale-based royalty. Sales-based royalty. The question that for license B, the consideration is 3% of the customer future sales of product that uses license B. For the purpose of allocation, the entity estimated sales-based royalty, that is variable consideration, is to be rupees 20 lakh. Is to be rupees 20 lakh. Okay. Allocate the transaction price. So the transaction price is pretty simple. For A, it is 16 lakh. For B, it is 20 lakhs, right? So case A is very simple. Now let's discuss the case B. And I am giving you 1 minute to read this case B and understand this case B. Please read this case B. Okay, what case number B is talking about. Okay, please read that. So case number A is pretty simple. Right? What case number B is talking about? What it is talking about? The price stated in the contract for license A is a fixed amount of 6 lakh. And for license B, the consideration is 5% of the customer's future sales of products that uses license B. In the first two lines, it has given you the fixed consideration of product A, and for product B, 5% of the customer future sales, means royalty. The entity estimate of the sales based royalty is rupees 30 lakh. Is rupees 30 lakh. So what this entity is expecting, this entity is expecting that the total sales based royalty comes out at 30 lakh rupees. Okay. Here, license A is transferred 3 months later on. If you see this arrangement, the company is selling two products, A and B, right? The contract is 1, the performance obligation at 2. One aspect is determine the standalone selling price and sell the goods on the standalone selling price. Correct? If there is a discount on the package, allocate the discount to the in the ratio of the standalone selling price. The second aspect, when there is a variable consideration which is involved, right? Friends, if you will just go beyond from your student mind, and when you enter into the professional's mind and the corporates, you know, there is a lot of manipulation which can happen in the revenue recognition, right? According to your whims and fancies. Because, for example, you have to take a loan from the bank. Okay. And you have to strong your financial statement. So in the initial period, you want to inflate your sales. You want to inflate your sales. And you are selling goods which is having a multiple performance obligation. What will be your objective? Your objective is to record more revenue in the initial years. Correct? अगर आपको सेल्स इन्फ्लेट करनी है तो आपका ऑब्जेक्टिव क्या होगा? आपको ज्यादा से ज्यादा रेवेन्यू रिकॉर्ड करना है इनिशियल ईयर्स में. मतलब जो शुरू के परफॉर्मेंस ऑब्लिगेशन है, जो आपके इनिशियल परफॉर्मेंस ऑब्लिगेशंस हैं, उन इनिशियल परफॉर्मेंस ऑब्लिगेशन में यू हैव टू एलोकेट मोर एंड मोर ट्रांजैक्शन प्राइस. करेक्ट? Am I right? Or it could be vice versa also. For example, you don't want to pay tax. You don't want to recognize revenue, much revenue upfront. You want to recognize less revenue upfront in the initial years and more revenue in the later years. In that case, what will be your objective? Your objective is to record lesser revenue in the initial year, more revenue in the later years. Friends, that is why the standard talks about compute the transaction price for a contract, not for the performance obligation, for the contract first. Then allocate the transaction price into the multiple performance obligation of the contract. Into the multiple performance obligation of the contract. Clear? Have you understood why standard talks about allocation of transaction price? Is that clear? Yeah. So in this question, if you will see in this question, the price stated in the contract for license A is a fixed amount, whereas the cost of the license is 16 lakh rupees. If you see this question, what this question talks about, कि उसका प्राइस तो लाइसेंस ए का 16 लाख रुपए, लाइसेंस बी का 20 लाख रुपए है, लेकिन केस बी में क्या किया, कॉन्ट्रैक्ट में बोला कि लिसन, लाइसेंस ए का फिक्स अमाउंट है 6 लाख रुपए, ठीक है, आप लाइसेंस ए का 6 लाख रुपए रखो, बट लाइसेंस बी का जो प्राइस है, लाइसेंस बी में इंस्टेड ऑफ गिविंग 3% रॉयल्टी, वी विल गिव यू 5% सेल्स बेस्ड रॉयल्टी, and this 5% sales based royalty is estimated at 30 lakh rupees. Correct? And license A is transferred 3 months later. License A is transferred 3 months later. The royalty due from the customer's first month of sales is rupees 4 lakh. Friends, in case B, what is given in the case B? In case B, license A, license B. License A fixed consideration is not 16 lakh. It is only 6 lakh. Instead of 16 lakh, इन्होंने कॉन्ट्रैक्ट को मैनिपुलेट किया और बोला कि लाइसेंस ए आई विल सेल यू ओनली ऑन द फिक्स कंसिडरेशन ऑफ 6 लाख रुपए, बिकॉज इट इज डजंट मैटर टू द कंपनी. मैं एफआर और ऑडिट पढ़ाता हूं, मुझे पूरे 10,000 रुपीज चाहिए. हाउ डज इट मैटर इफ यू विल पे 7,000 फॉर एफआर एंड 3,000 फॉर ऑडिट, or 8,000 for audit and 2,000 for FR? If you are taking both the subject and you have to pay me 10,000, how does it matter if you will tell that, sir, I will pay you 7,000 for FR and 3,000 for audit? It doesn't matters to me anymore. Right? मुझे कोई फर्क नहीं पड़ता because I am getting 10,000 rupees. So likewise, for doing some manipulation, this company has planned with the customer that, Mr. Customer, I will sell the license A for 6 lakh rupees and license B on the basis of sales based royalty, on the basis of variable amount which was allocated to license B. This pertains some amount which is related to license A also. Don't you think that license B has given more weightage in comparison to license A? So don't you think you need to see this entire transaction price as a single transaction price, right? And further, what is written in the question? Yeah. What is written in the question? In the question, it is written that further in the question, it is written that the first month, the license A is sold 3 months later and license B has sold first. So license B has sold initially and license A has sold 3 months later on. Okay. So in case B, let's discuss the case B. It is important. It is critical. If you see the case number B, what is the total transaction price? What is the total transaction price in this case? What is the total transaction price? 36 lakh. This is the transaction price. Okay. This is the transaction price. Okay. And the entity has allocated the transaction price 6 lakh and 30 lakh. But is it the right allocation? Answer is no. What is the standalone selling price? Tell me, what is the standalone selling price in this case? Standalone selling price 16 lakh and 20 lakh, which is given in the question. Question के शुरू में लिखा था ना 16 लाख और 20 लाख, right? So the entity has sold license B first, and the entity has received 6 lakh rupees. So initially, the company has received 6 lakh rupees, right? 6 lakh. कंपनी को शुरू में कितना मिला? शुरू में कंपनी को 6 लाख रुपए मिला. So the entity allocate the transaction price of 6 lakh rupees to license A and license B on the basis of what? On the basis of standalone selling price. On the basis of standalone selling price. तो क्या आएगा प्राइस? प्राइस क्या आएगा? 6 लाख रुपए एलोकेट करेंगे तो प्राइस क्या आएगा? स्टैंडअलोन सेलिंग प्राइस ये है. सो एलोकेशन ऑफ 6 lakh. 6 lakh multiply by 16 divide by 36. 6 lakh multiply by 20 divide by 36. Okay. This is my license A and license B allocation of 6 lakh rupees, right? This is my license A and license B allocation of 6 lakh rupees. Clear? Is that clear? Or any doubt, any problem here? I hope it is clear to everyone. Yes. Now, friends, upfront, the entity has received 6 lakh rupees, but the entity has only transferred license B, right? So entity has only transferred license B. So recognition of revenue, recognition of revenue. How much revenue is going to be recognized? The entity has only delivered the performance obligation of license B, So how much revenue needs to be recognized? Tell me. Entity को 6 लाख तो मिल गए. The price stated in the contract for license A is a fixed amount. Okay. The entity estimate the sales based royalty. So let's say the price the entity has not received, for example. So in that case, customer account debit. To revenue from sale of license B. License B. How much revenue is going to be recognized? Right. Being revenue recognized at the time of delivery of license B. Royalty revenue. Tell me whether this royalty revenue of 4 lakh needs to be allocated or this entire royalty belongs to only license B. Whether this entire royalty belongs to license B or this 4 lakh of royalty is also required to be allocated. Tell me. Friends, ये arrangement क्या है? A और B, जो A और B का combination है, the total standalone selling price is 36 lakh. The standalone selling price is 16 lakh for product A, 20 lakh for product B. ये आपको क्वेश्चन में दिया है. उसके बाद क्वेश्चन में आपको दो सिचुएशन दी. सिचुएशन 1, सिचुएशन 2. सिचुएशन नंबर 1 में जो आपको दिया था उसमें ए का फिक्स कंसिडरेशन 16 लाख रुपए दिया था, बी का वेरिएबल कंसिडरेशन 20 लाख रुपए दिया था, विच इज कॉमेंसुरेटिंग विथ योर स्टैंडअलोन सेलिंग प्राइस. सो दैट वाज द ट्रांजैक्शन प्राइस. बट जब हम सिचुएशन नंबर बी में आए, केस बी में आए, तो इट सेज दैट कि ए का तो फिक्स कंसिडरेशन 6 लाख रुपए है और बी का सारा वेरिएबल कंसिडरेशन है जो 30 लाख रुपीज है. राइट. So in this contract, there are some manipulation. In this contract, the price of A, the contracted price of A has been suppressed and the contracted price of B has been uplifted. B का price बढ़ा दिया, A का price गिरा दिया. Why? Because the entity wants to recognize more revenue upfront. Okay. Because the entity is delivering license B first and the entity will deliver license A later on. So there is in this entire contract, there is a nexus. So you have to see this contract in one eye. कि पूरा प्राइस तो 36 लाख रुपए है ना. So whatever the entity will receive, the entity needs to allocate. The entity needs to allocate in the ratio of the standalone selling price. Because there is a nexus, there is an arrangement in the contract. Right? So upper case, For recognition, we will only recognize relating to license B, but I need to allocate in the ratio of standalone selling price. Allocation of 4 lakh rupees. Allocation of 4 lakh. And how to do this? 4 lakh multiply by 16 lakh divided by 36 lakh. 4 lakh multiply by 20 lakh divided by 36 lakh. This is 4 lakh. Sir, we understand that how you have allocated this 4 lakh rupees. But sir, this license A has not been delivered yet. So my dear friends, that is why we will not recognize revenue with respect to license A. We will only recognize revenue with respect to license B. Customer account debit to revenue from royalty of license B. Okay. So how much revenue I'll recognize? 2,22,222. Is that clear? 3 months later, license A has been delivered. Now I need to recognize revenue. Customer account debit to revenue from sale of license A, to revenue from royalty of license A, right? Credit. What is debit? So first I'll put the credit. 2,66,667, 177,778, right? And what is my revenue? This plus this. Sorry. This plus this. Okay. So when further royalty will come, we will recognize further royalty also. We will recognize. Friends, is that clear to all of you or not? ये समझ में आया या नहीं आया? समझ आ गया? Okay. Anyone who has not been able to understand this concept? Anyone who has not been able to understand this concepts, friends? अगर किसी को समझ नहीं आया, Anila is asking, sir, first month balance amount entry 26667. Yes. For example, Anila, in this case, if the entity has received, assuming the entity has received 6 lakh rupees, so the accounting entry will be bank account debit 6 lakh rupees. 2. Revenue from sale of license B 3,33,333 rupees. 2 what? To deferred revenue 2,66,667 rupees. Okay. So in this case, if you see, in this case, this 4 lakh rupees, in this case, the 4 lakh rupees, the customer has received the 4 lakh rupees. Okay. The entity has received 4 lakh rupees from the customer. The royalty was 4 lakh rupees ना, तो क्या एंट्री होगी? बैंक अकाउंट डेबिट 4 lakh to revenue 2,22,222 to what? To contract liability, deferred revenue. Okay. So in the present case, we have considered credit sales. If the cash sales will be there, then what will be the entry? Assuming the entity has received 6 lakh upfront and 4 lakh after 1 month. Then what is the accounting entry? Bank account debit to revenue from sale of license B credit To revenue from sales of license B credit. To contract and my revenue from which is going to be deferred contract liability. It is 266,667. Okay. So this was at the time of recognition of revenue. Royalty revenue, again, what entry you need to pass? Again, bank account debit. Bank account debit. How much? 4 lakh rupees. Okay. To revenue from sale of license B. Credit. Credit. By what amount? You need to credit by 2,222,22. To contract liability, deferred revenue, credit. This is yes, you are right, Stephen. It is nothing. It's a advance from the customer. So in 115, it is considered as a contract liability. Okay. So after 3 months, when the license A will be delivered, after 3 months, when license A will be delivered, then contract liability will be debited. Contract liability account debit. Account debit. It was credited by this and this value. So it will be debited to revenue from license A and revenue from royalty, variable consideration basically. Right. So this is the value. I hope now with the help of accounting entries, this aspect is clear to all of you. Friends, the intent of Ind AS 115 is you have to do the fair allocation while recognizing the revenue. And why it is important? It is important because the timing of revenue is depending on the delivering of performance obligation, right? If these kind of concept will not be there, entities started manipulating, right? And they will recognize higher revenue whenever they want to recognize higher, or they will recognize lower revenue when they want to recognize lower values. Clear? So this is what they will start doing it. Okay, friends? Is that clear? Clear or not clear? So this is what we have discussed in illustration number 56. This illustration is a very important illustration, very critical illustration, I would say, right? So friends, I have covered step number 4, and please remember illustration number 52, illustration number 54, and illustration number 56. If you have any question, I would be happy to answer. If you have any question, I would be happy to answer.
Raj.
Yes, Raj.
So I have sent a question. Can you see?
Raj, can you send it again?
I am sending.
Yeah, please send it again.
Sir, this is Nisha. I too have a question. Can we address that after this Raj's question, sir?
Sure, Nisha.
Thank you, sir.
Okay, so Raj, let me put this question for everyone's benefit. So let me paste this question. Okay, so please confirm once you will be able to see this question on the screen. Please confirm me.
Yeah.
So I hope my Excel file is visible and this question
Yes,
is also visible. So let me make it bigger. Is it visible now? I hope it is visible now to everyone.
Yes.
Yes. Okay. KK Limited runs a departmental store which awards 10 points for every purchase of rupees 500, which can be discounted by the customer for further shopping with the same merchant. So friends, This question is relating to, you remember, we have discussed material right to discount. We have discussed the reward points, loyalty points, additional discount on the future purchases. We have discussed that concept while discussing the performance obligation and transaction price. Okay. So transaction price में हमने पढ़ा था ना कि ये एक अलग performance obligation होगी because we are getting additional right to discount. Why? By entering into a contract. Okay. So this departmental store awards 10 points for every purchases of rupees 500, which can be discounted by the customer for further shopping with the same merchant. Each point is redeemable on any future purchases of KK Limited product within 3 years. Value of each point is rupees 50 पैसा. Okay. So ये जो कंपनी है, ये कंपनी जब भी सेल्स करती है 500 रुपीस की, तो ये कंपनी कितने रिवार्ड पॉइंट्स देती है? रिवार्ड पॉइंट्स. So this company is like a super stop. Whenever you purchase the garments or accessories of 500 rupees, this company will give you 10 reward points. Okay. And this reward point the customer can use while purchasing the additional goods and services in future. Okay. And this is valid for 3 years. Value of each point is 50 paisa. And what is the value of the reward points? Value of reward points. What is the value? 50 paisa. 0.50, 50 paisa. It means what is the value of this 10 reward points, for example? So at the sales of 500 rupees, the company is giving 5 rupees, right? The company is giving a discount of 5 rupees. मतलब अगर राज एक कस्टमर है, राज ने अगर 500 का गुड्स परचेज किया है तो राज को 10 रिवार्ड पॉइंट्स मिलेंगे और राज उससे 5 रुपए तक का सामान फ्री में खरीद सकता है. मींस 5 रुपए तक का डिस्काउंट ले सकता है. It means there are two performance obligation. One is sale of goods right now. Second, giving a right to discount in future. During the accounting period 17-18, the entity awarded 100 lakh, 1 crore points to various customers, of which 18 lakh points remained undiscounted, means unredeemed, till 31st March to be redeemed till 31st March 2020. The management expects only 80% of the remaining will be discounted in future. So what is the inventory in 2017-18? So during the accounting period 2017-18, 2017, okay. How much total reward points given? Total reward points. How much total reward points are given? 1 crore. 100 lakh. 1, 2, 3, 4, 5, 6, 7. 1 crore reward point is given. Okay. And what is points to which various customer, of which 18 lakh points remained undiscounted? So utilized. How much points are utilized? It is written that balance reward points. Balance reward points to be discounted in future. So balance reward points are given in this question, which is 18 lakh. 1, 2, 3, 4, 5. So what is the utilization? It means 82 lakh point has been utilized. इसका मतलब इस कंपनी ने, डिपार्टमेंटल स्टोर ने जितने रिवार्ड पॉइंट्स कस्टमर्स को दिए थे, टोटल 1 करोड़ रिवार्ड पॉइंट्स दिए थे, उसमें से 82 लाख यूटिलाइज हो गए और बैलेंस कितना बचा? 18 लाख. एंड इस कंपनी ने 17-18 में जो सेल्स की है उस पे रिवार्ड पॉइंट दिए हैं, विच इज वैलिड अप टू 3 years, मींस वैलिड अप टू 31st March 20. ओके. द मैनेजमेंट एक्सपेक्ट्स ओनली 80% ऑफ द रिमेनिंग विल बी डिस्काउंटेड इन फ्यूचर. नाउ some question have been asked in this question. The company has approached your firm with the following queries and has asked you to suggest the accounting treatment, journal entries under the applicable Ind AS for these reward points. How should the recognition be done for the sale of goods worth rupees 10 lakh on a particular day? Okay. How should the recognition done for sale of goods worth rupees 10 lakh on a particular day? On a particular day. How should the redemption transaction be recorded in the year 17-18? The company has requested you to present the sale of goods and redemption as independent transaction. Total sale of entity is 5,000 lakhs. So first, what is the first question? What is the first question, Raj? How should the recognition be done for sales of goods worth rupees 10 lakh on a particular date?
Yeah.
Sale goods. What is the value of sale of goods? 10 lakh rupees.
1 lakh.
1, 2, 3, 4, 5. 10 lakh.
1.
Okay. 10 lakh rupees. So if the sale of goods is 10 lakh rupees, what is the value of the reward points? What is the value of reward points? So 1 lakh
No,
divided
sir.
by 500
10,000.
divide by
10,000.
500 multiply by 10. So अगर 500 रुपए पे 10 मिलते हैं रिवार्ड पॉइंट, तो 10 लाख रुपए पे कितने रिवार्ड पॉइंट मिलेंगे? 20,000 मिलेंगे, करेक्ट?
Yes.
Yes. So this is my reward point. My sale of goods is 10 lakh rupees. So I am selling goods worth rupees 10 lakh. And what is the value of the reward points? What is value of reward point?
0.5.
0.5. So 20,000 multiplied by 0.5. Okay. 10,000. Right? This is what which is given in the question. This is what which is given in the question. 0.5. Okay. So in this case, we are selling goods worth rupees 10 lakh. The fair value of the reward point is 10,000. Correct? So how this revenue is going to be recognized? The revenue, what is the transaction price? So we got the standalone selling price. We got there are two performance obligations, sale of goods and what is reward points, sale of goods and reward points, which is future discount. So what is my standalone selling price of both these item? 10 lakh or 10,000, right? यही होगा ना?
Yes, sir.
What is my transaction price?
10.
ट्रांजेक्शन प्राइस तो 10 लाख ही है, कस्टमर ने तो 10 लाख रुपए दिए है ना. ट्रांजेक्शन प्राइस इज 10 लाख रुपीज. सो 10 lakh multiply by 10 lakh divide by 10 lakh 10,000. 10 lakh multiply by 10,000 divide by 10 lakh 10,000. So I got the revenue to allocated on the first transaction price. What is the accounting entry? Accounting entry is bank account debit to revenue from sale of goods credit to contract liability, deferred revenue, right? Which is nothing, it's a deferred revenue. आप सिर्फ deferred revenue लिखोगे तो भी चलेगा, credit. Okay. So how much money this entity has received? 10 lakh rupees. Revenue which needs to be recognized, 9,90,099 rupees. How should the redemption transaction be recorded in the year 1718? The company has requested you to present the sale of goods and redemption as independent transaction. Means the question says that you have to pass the accounting entry of sale of goods separately and redemption separately. Total sales of the entity is 5,000 lakhs, right? So instead of sale of goods of here it was 10 lakh. Now it is 5,000 lakhs sale of goods. What is my sale of goods? 5,000 lakhs. Present the sale of goods and redemption as independent transaction. Okay. 5,000 lakhs. So what is the reward point? How should the redemption transaction be recorded in the year 1718? Okay. So friends, 1718. First of all, in 1718. Total sales was 5,000 lakhs. What was the reward point on 5,000 lakhs? What was the reward points? 5,000 lakhs divided by 500 multiply by 10. 100 lakhs वही दिया था ना क्वेश्चन में, क्वेश्चन
Yes,
में
sir.
ये बोला था ना 1 करोड़ थे ना,
Yes, sir. 50 lakhs आएगा value.
तो 5 ये लिखा था ना कि क्वेश्चन में रिवार्ड पॉइंट वाज 1 करोड़, सो 100 लैक्स का रिवार्ड पॉइंट आया, वो कितने पे आया, 5000 लैक्स की सेल्स पे आया, करेक्ट। 100 लैक्स मीन्स 1 करोड़, वो जो कि ऊपर दिया भी था क्वेश्चन में रिवार्ड पॉइंट। ओके, इसमें से रिडम्पशन कितनी हुई है, इसमें व्हाट इज द रिडम्पशन, 82 लैक्स लिखा था ना ऊपर क्वेश्चन में, माय रिडम्पशन इज 82 लाख यूनिट लिखा था ना, 1 करोड़ इज द टोटल रिवार्ड पॉइंट, द बैलेंस रिवार्ड पॉइंट ऑन 31st March 18 is 18 lakh, it means the remaining reward point has been utilized, expired, whatever it may be, expire तो हो नहीं सकते। yes, 100 lakh is the point, not value, 100 lakh तो point है, लिखा है ना यहाँ पे। during the counting period the entity awarded 1 crore points to various customer, 100 lakh, not 100 lakh rupees value, 100 lakh points, okay, correct। so when this entity has made a sales, when this entity has made a sales, this entity has recognized a reward point also, okay। what is the value of this reward point, what is the value of this reward point,
50 lakh.
50 lakhs, 100 lakhs multiply by 0.5, 50 lakh is the value of this reward points, okay। 100 lakh are the reward point number, 50 lakh is the value, 50 lakh is the value, let me write here, okay, 50 lakh is value of reward points। so friends, what is the performance obligation in this case, what is the performance obligation, there are two performance obligations, what is the standalone selling price, what is the standalone selling price, 5000 lakhs for goods and 50 lakhs for what, reward points। what is the transaction price, पैसा कितना आया पूरे साल में,
500.
5000 lakhs ही आया ना पैसा तो, ओके 5000 lakhs आया, so 5000 multiply by 5000 divide by 5050, 5000 multiply by 50 divide by 5050, करेक्ट। तो ये मेरा रेवेन्यू रिकॉग्निशन हो गया, व्हाट इज माय रेवेन्यू रिकॉग्निशन, so what is my revenue recognition, what is my sale, what is my sale transaction, again my bank account debit, let me use this entry, bank account debit, bank account debit, bank account will be debited by 5000 lakhs to revenue 4950 to contract liability, what is my contract liability, 50 lakhs is my contract liability, correct, ये ठीक है ना,
Yes, sir.
ओके। सो मेरी कॉन्ट्रैक्ट लायबिलिटी इतनी आ गई, बीइंग, सो एट द टाइम ऑफ सेल्स, एट द टाइम ऑफ रिडम्पशन, हाउ मेनी पॉइंट्स हैव बीन रिडीम्ड,
82,000.
82 lakhs, okay, 82 lakh point, not money, so contract liability deferred revenue will be debited, account debit, account debit, to what, to what, now I need to recognize the revenue, पैसा तो आ ही चुका है ना मुझे, I need to recognize the revenue, what is, to what extent, to what extent, 82 lakh, 82 lakh redemption is there, multiply by what is my fair value, what is my fair value at which it has been redeemed, 0.5, 41, 41, okay, so to that extent revenue is required to be recognized, clear, 18 lakh point is remaining, 18 lakh point is remaining as of now, is that clear, is that clear friends, clear or not clear,
सर इसे एक बार प्लीज दोबारा बता दीजिए रिडम्पशन पॉइंट का।
सो इसके अंदर रिडम्पशन मेरे कितने पॉइंट्स हुए हैं, 82 लाख पॉइंट रिडीम हुए ना, वो क्वेश्चन में लिखा है। मतलब क्वेश्चन में टोटल पॉइंट के बारे में बताया और बैलेंस बताया, तो बचा हुआ यूटिलाइज हो गया होगा, रिडीम हो गया होगा, करेक्ट? यस। सो
Yes.
जब किस वैल्यू पे होगी? सो 82 लाख पॉइंट्स, 82 लाख पॉइंट्स multiply by fair value of these points, correct, which is 50 paisa. So being revenue, being contract liability reversed to the extent points redeemed, okay, to the extent points redeemed और expired. बट इस क्वेश्चन में एक्सपायर नहीं होंगे, क्योंकि एक्सपायर तो होंगे 31 मार्च 20 को जाके। क्वेश्चन नंबर सी, हाउ मच ऑफ द deferred revenue, sorry,
So actually, they have taken that expectation. The management have expectation 80% that the remaining 80% will be used. So the remaining 20% they have taken as they have been utilized as revenue.
So let me come to that also. So I have not completed this, so let me come to that, right? So we have recognized the revenue for 82 lakh points, right? So let me read this question number C, then I'll come to question number B again. Okay. How much of the deferred revenue should be recognized at the year end 17-18 because of the estimation that only 80% of the outstanding points will be redeemed? Okay. Yes. So I don't know why this C becomes copyright. Okay. Yes. Remaining points at the year end. What are the remaining points at year end? कितने points बचे हैं? 18 lakh.
18 lakh.
Correct? Remaining points are 18 lakh. And what is the expectation? What is the expectation to be redeemed in future? To be redeemed in future? कितनी expectation है कि future में redeem होगा? 80%. So friends, out of this 50 lakh rupees of contract liability, we have the actual point redemption of 82 lakhs, which we have already recognized. Now we have the remaining contract liability of 9 lakh rupees. But the question says that out of 18 lakh reward points, they are not expecting that 20% are going to be redeemed. Okay, what does it mean? It means to the extent of 20%, we need to reverse the contract liability itself. Correct? So again, in question number C, contract liability debit to revenue. By how much amount? Being contract liability reversed to the extent points will be expired. What is the amount? What is the balance point value?
9
What
lakh.
is the balance point value? 9 lakh. So out हुआ या नहीं हुआ ये? Right? Raj, is that clear?
So I'm sorry, sir. It's not clear to me. See, 82 lakh is a recognized revenue because it is redeemed. I mean, 82
Yes.
lakh points. So for the 41 lakhs, the corresponding value for the revenue recognized owing to redeemed points.
Yes.
Is there a reverse with this 82 lakhs, or is it totally different? It's the reversal is only pertaining to the 18 lakhs reward points that is outstanding.
So what's your name?
Nisha, sir. This is Nisha.
Acha. Nisha, if you look at this entire arrangement, right? When you have sold goods, you have collected the money from the customer, correct? And you have also committed to provide the reward points, right? And these reward points has a value, which this customer will use, and the customer will make the future purchases and customer will get the discount, right? But you have collected the money. Let's take a small example. This entity has purchased the goods worth 1,000 rupees. Okay. And the company has given a discount, given a reward points to the extent of 20 reward points. Okay. The value is 10 rupees. At the time the company has made a sale of 1,000 rupees, the company has two obligations. One, the company will karenge. So it is depending on the future. So the company needs to estimate what is the value of the variable consideration, what is the value of the reward points. As per the past precedence, the company expects that no one will come to avail these reward points. No one will come to avail these reward points, right? For example, if I talk about the expensive products like Rolex watch, when you buy a Rolex watch, you will get a reward point of 1 reward point for every 1,000 rupees of purchases. Okay. The Rolex watch cost you 1 lakh rupees. So for a 1 lakh rupees of sale, you will get a reward point of 100 rupees, right? Now, the company, the Rolex watch, when it is selling goods to the customer, when it's selling watches to the customer, the Rolex has two performance obligations, sale of watch and reward points, by which the customer will avail the discount in future. But normally the kind of the customer with which Rolex is dealing, no one will come to avail this discount. No one will come. Why? Number one, the product is a durable product. Everyone is not buying watches every 6 months or every 1 year. Number two, the gentry or the class of the customer who are buying this Rolex watches, so they are the high profile customer who does not bother about 100, 200, 500 rupees, right? So Rolex, when recognizing the revenue, when Rolex is recognizing the revenue, so Rolex recognize the revenue, entire revenue, when Rolex is selling the watches. तो Rolex रिवार्ड पॉइंट का रेवेन्यू, रिवार्ड पॉइंट की कॉन्ट्रैक्ट लायबिलिटी रिकॉग्नाइज ही नहीं करता. क्यों? क्योंकि Rolex expect that no one will come to avail these reward points and these reward points will be expired. Correct. So performance obligation तो दो हैं. What are the two performance obligations? Sale of watches and reward points. The value of the reward point is 0. So when Rolex will allocate the transaction price into the two performance obligation, reward point की performance obligation 0 आएगी. Rolex accounting entry क्या पास करेगा? Bank account debit 1 lakh to revenue from sale of watches 1 lakh, to contract liability 0. So likewise, Nisha, at the end of the first year, when the company has given the reward points, 1 crore reward point to the customer, out of 1 crore, 82 lakh reward points has been availed by the customer. So actual में customer ने avail कर लिया. So to that extent, first we have created a contract liability because in the beginning, the expectation was not there. It means you have assumed 100%, that 100% will avail. But when you reaches to the year end, you found that 82% means 82 lakh has already availed. तो उसका तो एक्चुअली हमने कॉन्ट्रैक्ट लायबिलिटी रिवर्स कर दिया. वी हैव रिवर्स कॉन्ट्रैक्ट लायबिलिटी फॉर 82 lakh रिवार्ड पॉइंट्स. नाउ वी हैव रिमेनिंग 18 lakh रिवार्ड पॉइंट्स एंड वी एक्सपेक्ट दैट only 80% customer will come to avail these reward points. So 18 lakh multiplied by 80%, this contract liability will be utilized in future. But to the extent of 20%, no one will come. This is the expectation of the company. So if no one will come, in the money I have already collected when I have done the sales. So to the extent of 20% contract liability, I will reverse, right? I will reverse. क्योंकि ये मेरी liability तो तभी आएगी ना जब customer avail करने आएगा. And I expect that no one will come to the extent of 20%. And hence this contract liability is going to be reversed. Like Rolex. Rolex recognizing the contract liability at 0 means Rolex reverse कर देता है contract liability को. Is that clear, Nisha, or it is not clear even now?
Yes, sir. Yes,
Sir.
I'm clear, sir. Thank you, sir.
Yes. So I'm not
Sir.
touching the D and E part. Okay.
Yeah, it's okay, sir.
Because sorry.
Yeah, it's fine. But here it is that the thing is that in the question they have taken like the whole amount, which is 50 lakh, belongs to 6.4, which means that they have not taken. Matlab, management is assuming that this 50 only belongs to those they are expecting that they will be utilized. Matlab, 96.40 reward point means that 50 contract liability belong to only 96.40 points.
Okay.
which they think this is gonna be utilized.
So in this question, Raj, your name is Raj, right?
Yeah.
So Raj, in this question, if you will see the sequence of the question, right, in my view, so first there is a sales, second there is a redemption, third there is a fair value attached to the sales, attached to the reward points. So whatever you have actually redeemed, it has actually gone, right? Now you have two things left in your hand. One, you have 9 lakh rupees of a liability and you have a 18 lakh of reward points, correct?
Yeah.
Right. And today, sitting on 31st March 18, you have some expectation. And you have an expectation that I am going to redeem or the customers are going to avail only 80% of the reward points. मतलब ये जो 18 लाख का रिवार्ड पॉइंट है, इसमें से कस्टमर सिर्फ 80% अवेल करने वाले हैं. The customers are going to avail only 14.4. Only 14.4, right?
Yes.
So my remaining liability is 9 lakh, which pertains to 18 lakh reward points. So what is my liability which pertains to 14.44 lakh points? 9 लाख मल्टीप्लाई बाय, अगर मैं ये करूं तो 9 लाख तो टोटल लाइबिलिटी है, वो 18 लाख पॉइंट्स की है, तो 14.4 की कितनी होगी? 7.2. अगर 7.2 होगी तो मुझे 1.8 ही तो रिवर्स करना पड़ेगा ना.
I am agreeing with this solution, but the solution which is an answer, now they have assumed they have not done it separately. They have passed one single entry in which they have taken this 50 belongs to the 96.4, which is total of the point redeem and expected to be redeemed. 82 plus 14.4. Now they have taken a base. This is it. And now in this case, we are assuming that the base is 100 points, 100 lakh points. But in the question and the answer solution they have provided, they have assumed the base to be 96.4.
So ideally you have to flow in this manner only, in which I have explained you. Why? Just think about one situation.
Yeah,
so this is the entire period. So Raj, hear me first. So I'm giving you the logic of that also. कि ऐसे क्यों करना चाहिए? Because the period is 1 year, right? So do you think that all the customer who are having 82 lakh reward points will come at a single day? Answer is no. Correct? Are you getting me? Answer is no. So the company, this entire 5,000 lakhs, 50 crore revenue, 50 crore sales, the company has not made in a single day. So in the month of April, the company has done some sales. The company has given some reward points. Then a few customers have utilized the reward points in the month of May, and then few in June, July, August, September, so on and so forth, right? And in the question from the day one, estimation was not given from the day one, correct?
Yeah.
In the question, the fair value was given, and it is given that out of the remaining reward points, the estimation is 80%. Correct? और अगर आप देखोगे, अगर आप देखोगे, मैं आपको ही लॉजिक दे रहा हूं कि ऐसा क्यों करना चाहिए. आई एम नॉट कमेंटिंग ऑन कि आरटीपी के आंसर में क्या लिखा है, बट ऐसा करना क्यों चाहिए? क्योंकि 80% वाज नेवर होल्डिंग गुड इन बिगनिंग. व्हाई? क्योंकि 1 करोड़ रिवार्ड पॉइंट में से 82 लाख तो रिडीम ही हो चुके हैं. तो 82% का यूटिलाइजेशन तो पहले ही हो चुका है. करेक्ट? सो आइडियली the way I'm explaining you and the way I am solving this question, it has to be solved in this way, in my view.
Yeah, it's correct. I align with that because we have to take base of 100 points because it's whole points rather than 96.4. They might have assumed that the management is thinking that the point is of only for those which are going to be redeemed rather than which are not going to be redeemed. So they have just lapsed the points which have not been redeemed or they expect not to be redeemed.
Yeah.
So they have solved according to that, and this is solved according assuming the fact that the data is expected at the last of the day, not at the beginning of the day.
Correct. Right. So friends, it's 10:20 now. So let's conclude the session. Let's call out the session. So today we discussed we have done the revision of step number 3, determining the transaction price. And we have also discussed, and in determining the transaction price, we have also covered illustration number 52. And we have also discussed step number 4, which is allocating the transaction price to the multiple performance obligation. We talked about the transaction price while computing the standalone selling price of performance obligation, it has to be at fair value. If it is not available, then you have to estimate it by using the AMMA approach, cost plus margin, or residual approach. We discussed the allocation of discount and variable consideration to the multiple performance obligation while determining the standalone selling price. And we have also discussed about 2-3 illustration along with this RTP question, which is given by the Raj. Thank you so much, friends. Thank you so much. I hope you guys have enjoyed and able to understand this question.
So my doubt tomorrow, sir, please. Nisha
Okay,
here, sir.
So what is your doubt?
We can do it tomorrow, so that's not a problem. So it's this illustration 39. I understood the logic of it, but they arrived at a value depending on the discounted factor, which mathematically didn't arrive from me, sir. So that's the only doubt, sir. No,
Mathematical, it is not.
I mean, the numbers that I am getting is different from the numbers that the answers suggested.
And what is the difference? The difference is in hundreds or thousands, or the difference is huge?
It's huge, close to a lakh, sir.
Close to a lakh. So let me look at the question.
Illustration 39.
Illustration 39. Okay. Illustration 39, determining the discount rate. Okay. VT Limited, this one?
Yes, sir.
VT Limited enters into a contract with a customer to sell equipment. Control of the equipment transferred to the customer when the contract is signed. Okay. The price stated in the contract is 1 crore plus a 10% contractual rate of interest payable in 60-month installment of rupees 2,12,470. Okay. So what is the price? It is 1 crore plus a 10% contractual rate of interest, which is payable in 60 monthly installment of rupees 2,12,000. Determine the discounting rate and the transaction price when, case A, when contractual discount rate reflects the rate in a separate financing transaction. Means this is the rate if the company has to take a loan or the incremental borrowing rate is 10%, right? Which is given in the question. And it says that the first case, the contractual discount rate reflects the rate in a separate financing transaction. So in evaluating the discount rate in the contract that contains a significant financing component, VT Limited observed that 10% contractual rate of interest reflect the rate that would be used in the separate financing transaction between the entity and the customer at the contract inception, which is a contractual rate of 10%. The market terms of the financing mean that the cash selling price of the equipment is rupees 1 crore. This amount is recognized as a revenue and loan receivable when control of the equipment transferred to the customer. The entity accounts for the receivable in accordance with Ind AS 109, and whatever, as per 10%, whatever interest is there, it has to be recognized as interest revenue. Okay.
This is clear, sir.
So is there any problem in case A?
No, no problem with case A. It's just that they have discounted the payments at 14% and the new mathematical case
Coming
B,
to case B, right? So let me read the case B. Contractual discount rate does not reflect the rate in a separate financing transaction. That is 14%. So it is saying that contractual discount rate, which is 10%, it does not reflect the rate in a separate financing transaction. Means the separate financing transaction rate is 14%. Correct? But the contractual discount rate is 10%. Yes? Are you able to understand this? So what
I'm able to understand.
What this illustration is saying, in evaluating the discount rate in the contract that contains a significant financing component, let me read the solution of ICAI study material. The entity observed that 10% contractual rate is significantly lower than 14% interest rate. That would VT Limited determine. Yes, Nisha.
Sorry, sir. Please go ahead. Please go ahead, sir.
VT Limited determines the transaction price by adjusting the promised amount of consideration to reflect the contractual payment using the 14% interest rate that reflect the credit characteristics of the customer, right? Post transaction का जो incremental borrowing rate है 14% है. Consequently, the entity determines that the transaction price is rupees 91 lakh 31,346. 60
Yes, for me,
monthly
I'm not
payment
able
of
to arrive.
2 lakh
I'm not
12,000.
able to arrive at this 91, so मेरा calculation गलत जा रहा है.
So आपका कैलकुलेशन में क्या आ रहा है अमाउंट?
I'm it's 88 lakhs something, sir. I'm not, sorry, I don't have to figure out what I did right now. I worked out in Excel, abhi nahi hai mere paas, but it didn't come up to 91 lakhs. So
Okay.
this was a problem. How do I calculate it?
The entity taken revenue. So basically you are saying if you will discount at 14%, your value is coming at 88 lakh, right?
Something around that, yes.
So can you show me the calculation?
So I did it in Excel. I don't have it. I'm sorry, sir, right now. So
Okay, not
I
a problem,
deleted the
Nisha.
file.
Nisha, you can do one thing. So I am giving you my email ID. You can
Okay.
email me at caalogarg@gmail.com, right? Let me write the email ID on the chat box. caalogarg@gmail.com. I will check and revert you. Okay?
So, if you do it with, it is not possible to do with the calculator. I have done with online calculator. I have got the answer, but if in exam,
Actually, right now I have to conclude the session. It's 8:10:30 because I have some commitment. So that is why I have told that please, or either I can do it in the next session tomorrow, right? So in between, if you can just share across, I will take this tomorrow as a first thing in the morning. Okay. So thank you, friends. Thank you so much. Bye bye. Take care. Yes, session.